my screen. I think we're good to go on that. Today's expert traders are going to show you how to build trade rules, an easy to learn trend following strategy, how to read price action like the professionals, and learning how to identify market breakouts in advance to capture the highest profit potential. And that's just 4 points that we're going to get. So please check out our website, tradersexclusive.com, where we regularly post articles and video clips with valuable trading tips and techniques. This is also where you're going to find a recording of today's webinar. And before we get started, I'd like to share the disclaimer. You know the one. You should carefully consider whether trading is suitable for you in light of your circumstances, knowledge, and financial resources. You may lose all or more of your initial investment. Opinions, market data, and recommendations are subject to change at any time. Past performance is not necessarily indicative of future results. We'd like for you to please take notes and have some context with it and hold your questions until the end, but please do jot down some questions, and that way you can clarify what's being shared. Our first speaker is Ed Carter. He's with Live Trading Alerts. He's going to share goals, discipline, and trading, my 2 favorite setups. And Ed is the architect of Live Trading Alerts, real-time scanning and alerting software. He's been trading for 25 years and coaching fellow traders for over a decade. Ed is a technical swing trader of both stocks and options. His focus is on trend, support and resistance, price action, and using discipline in his trading. He's an expert on using computers to improve both the effectiveness and efficiency of the trading process. In addition to LTA, Ed also designed the Trader Vision 2020 trade planning and journaling software. So let me bring Ed on and turn him into our presenter. Yes. Ed, you may be self-muted, so you can see if you are also now. There you go. And I've also made you an organizer so you can see the questions coming through.
Excellent. Thank you, Sherry, and thanks to everybody at Traders Exclusive for inviting me over today, and of course, everybody in the audience for spending part of their afternoon with me. What I'm going to try to do is keep this as short as possible, try to keep us on time, leave some time for questions at the end. Today, I'm going to talk about the most unsexy and basic concepts of trading. Frankly, they are not covered enough. And truthfully, I think they're the difference between success and failure as a trader in the long run. So I'm going to talk about setting goals, setting rules, and using discipline to build consistency. And then we'll talk about my 2 favorite setups. Okay, so the disclaimer, Sherry already went through one, so I'm not going to go through this again. You can read it yourself, but the basic idea is that every one of us is an adult, and we should make our own trading decisions and do so in an educated, informed manner, because trading is a risky business and you can lose money. So with that said, as I said, I'm going to talk about goals and discipline. Truthfully, a very, very unsexy topic. That's why not a lot of people talk about it, but these are the keys to success, and I hope I can show you that. Then we're going to talk about 2, basically the only 2 trade setups that I trade, and how I trade them, how I find them, how I trade them, and we'll go from there. You'll get some giveaways, freebies during the session that you can use later, because certainly we'll never have enough time to cover all of this stuff today, but we're going to put you on the right track, I think, and let's just go ahead and get started. So first of all, why do we want to use goals and discipline? Why do we not want to fly by the seat of our pants? It's very It feels great to be free and just make decisions in the moment. But the truth of the matter is, the reason most traders don't make money is that we're our own worst enemy. We will make decisions when we're under pressure. Our emotions will run away with us. We will not be consistent and controlled. And these are things that just kill your performance. We're all human beings and we've all got our own frailties. So with that in mind, we need to use something to keep us under control. And what those are goals, which will help us set the parameters for our trading, and then rules to keep us in line, protect us from ourselves. And then it's a matter of maintaining discipline to stay within our rules and work towards our goals. With that said, those goals are going to remove the indecision. How many of us, I know that my hands up, have been in a situation where I don't know whether or not to take a trade. I don't know when I should be taking profit, or maybe I should let this thing run. Maybe I should hope to get a little bit more out of this trade. Or on the downside, when do I need to be stopped out? I don't want to lose money. This thing ought to turn around. All of those things can be serious mistakes that can hurt us in the long run. And it certainly kills our consistency. So having set goals, hard rules, and then a hard process or discipline to your rules and goals is what's going to keep you on control and consistent, and working that process and improving that process towards your end goal of success. So let's talk a little bit about goal setting. And if you would, Sherry, could you send out that first link? It's just a spreadsheet. We're not collecting any information. You don't have to put in your name. Just a free spreadsheet. Use it as you will that I've created for basic goal setting. Real simple. Fill in the yellow boxes. Everything else calculates automatically. And it doesn't matter whether you've got a $5 million account or a $5,000 account, this will work for you. No, it does not factor in compounding, those sorts of things, but it does put you on basics and get you a set of goals, a set of parameters to manage your trades. So what you would do is you would enter your starting balance, figure out how many weeks a year you're going to be trading. Maybe that's 50, maybe it's only 40 or 30. You have to decide. It doesn't matter as long as you put in a pretty valid number there. You set a SMART goal, and by that I mean specific, measurable, actionable, realistic, and timely. So I want to be rich. It's not a goal, that's a fantasy. I want to make 50% on my account in the next year. That is a specific measurable goal. Is it realistic? Well, that depends on your experience. If you have proven to yourself that you can be successful in the past, maybe that's a very realistic goal. For a new trader, I like to tell them to start with a goal of 20% a year. Now, this is a living document, so you're going to revisit this, every month, every quarter, and adjust these goals, these parameters. And so if you find after a quarter that you're just blowing away 20%, then raise your goal. That's the whole idea. We're going to continue revisiting this, continue improving our goals, reducing our risks, improving our win sizes, improving our win ratio. And by that means, work our way towards our end target of financial freedom. So again, once you've got in those basic parameters, I suggest a position size of no more 4% per position. And that has to do with the risk of ruin, which is basically how many times can the company go out of business and you lose all of your money in a row before you're out of the game. The lower the percentage per position, the longer, the more catastrophes you can can run into and still be in the game. Then you have to decide how many trades you can do per month. Is 3 trades a week right for you? Well, if you're a day trader, that number is probably going to be significantly higher than 12 trades a month. If you're a long-term position trader, maybe 12 is too many. But you need to decide what is the right number of trades per month. Put in your win ratio. Personally, I'm about 65%, but you put in what is correct for you. And again, this is a living document, so you will hopefully come back and continue to increase those numbers as we go along. Your win percentage and your loss percentage, on average, you should know these things, know about your own trading. If you don't know, stop your trading and get to a practice account and trade in a practice account until you learn about your trading. Know what you win on average. You know what your win ratio is, how much you lose on average, how much time you can put into it, how many trades per month. You need to know these things about yourself. It's not sexy, but it is basic and fundamental to having success. Once you put in that information, this spreadsheet's going to spread out what your average trade size should be. So that's a parameter for you. If it's $1,000, if it's $10,000, whatever it is, you know what position size you can take. You also know what you have to have as a goal for the trade. If it's $1,000 position and you cannot see easily making 110 bucks on the trade, you need to pass on that trade. If you can make your goal on that trade, but the loss is going to be too much, you need to pass. You cannot see a way to set a stop that's realistic, that is going to keep you below that loss maximum, then you need to pass on that trade. Again, these are parameters to help you act like a banker, to turn down loans, which is what every trade setup is. It's somebody requesting a loan of your money, and you have to treat it like that. So this goal setting and revisiting this process is going to give you these parameters: trade size, the win or goal win you have to have per trade, the average loss you have to have per trade. These are all going to be keys to your trading. Once we've got our goals, the next thing to talk about, is trading rules. And again, we are our own worst enemies, so the rules are here to protect us from ourselves. The idea is to make decisions with a cool, calm head and reduce that emotional impact of the moment. For example, we've all experienced that FOMO, that fear of missing out. We don't want to be chasing after a train in the train station and jumping at it. We need to have a calm, irrational decision. That's what the rules are there to keep us in line. It also removes the indecision. If I've got a hard rule I've got to have a 2-to-1 reward ratio, or I've got to have less than $1,000 risk, that makes it clear cut. It's black and white. Do I take the trade? Do I not take the trade? And the whole idea behind all these rules is to promote consistency. You have to think of trading as a business. It's a job. We're here to make money, and we need to do it in a systematic way. Like any business, we have to have metrics that help us continue to improve our performance and continue to make more money over time. And that's what the rules are for, and that's what the discipline to those rules are for. If you were working in a business and you broke the rules, you're going to be reprimanded. The same thing is going to be true in your trading. If you break the rules, you are not going to be successful. The market will punish you. So let's talk about some examples. I am personally a trend trader, and so I trade only with the trend, where I'm trading with the trend of the market. I use the SPY or the S&P 500 because that's pretty analogous with what I trade. And I like to use the 17 EMA because it matches my trading horizon in terms of what is a good indicator of trend for the trade horizons that I'm in. So I will talk about the rules specific to that, but that's the indicator I use to indicate a trend. I have another rule that I don't chase. If a stock has been up more than 6% or it's had 3+ candles in the direction of the trade, I'm going to pass because I've already missed that trade. It will set up, it will rest, it will come back, or I will find a better setup later. I don't want to chase a trade. By the same token, I only take trades where I have at least a 2-to-1 reward to risk ratio. If I can't see a way to make twice as much as I risk to my stop, I've got to pass. And most of the time, it's going to be higher than that. And the last two things, basically, I'm trying to buy at proven support, where price has proven it's bounced off a level. That's where I want to be buying, and I want to be selling below resistance. So I want to buy at support and sell into strength, if you will. Sherry, if you could share those next two links. I'm giving you guys, again, I'm not collecting any information. These are just free PDFs that give you examples of 25 trading rules that I use, and as well as my simple option trading rules. These are the hard and fast rules that I trade by, and they may not fit your situation. You know, again, I'm a swing trader. I tend to hold 2 to 3 weeks, truthfully 1 to 2 weeks, and I'm working on a daily time frame. If that's not you, or if you trade different setups than I trade, or if you just have a vastly different personality, you may need to adjust those rules. But this will give you some examples, allow you to see how you should set rules, the kind of areas that you should cover, and make this your own. Go ahead and take those and add the things that you think I've missed, subtract the ones that don't apply to you. That's the whole idea. Okay, with that said, the boring part of the presentation is over, and let's go ahead and skip ahead into my two favorite setups. As you may have gathered from my trading rule examples, I am a trend trader, so both of these happen within a trend. The first one is a tight consolidation in a trend, and the second one is a small pullback in a trend, and in both cases, I'm looking for the trend to resume. So let's talk about this first setup. It's that tight consolidation. Again, I'm using the 17 EMA. That may not be appropriate for you, but I do like to see a trend, a rest, a tight consolidation. Sorry about that. Just had to keep it from making noise here. But I'm looking for that trend, that tight consolidation, and then I'm looking to buy as the trend continues. I consider a strong trend underway. I use that 17 EMA. The rule that I specifically use is I'm looking for that 17 EMA to have been rising for at least 15 candles. And I want it to have risen 6 to 7%. And that is what I'm using for my time frame. Again, I'm a daily chart trader, and I'm looking to be in for a week or two. Sometimes I'm out earlier than that. Sometimes I will be in longer than that, almost never without taking profits. But that's the basic trade horizon. So then what do I consider to be a tight consolidation? I define that to be a consolidation of 4 to 5 candles where price has stayed within the 3% maximum high-low range during that consolidation, and the closing price has not climbed or fallen more than 2%. That's how I define a tight consolidation. I'm looking kind of by definition, if you have that tight consolidation, you're going to have a support level that has been held. And then I'm looking for the bulls to step back in. This is what that looks like. I think you can see we've got a strong trend that's underway. We've got that tight consolidation that's happened here over a number of candles, but the 17 EMA was still rising. I don't have it on the chart. You'll just have to take my word for it. And then I'm looking to buy as the bulls step in or we break out of that tight consolidation. So here's what it looks like in LTA. Why do I use LTA? And again, it's just using a computer. There are probably other tools you can use, certainly are. But I use it because it allows me to not flip through charts, not stare at ticks, and let the computer do the work for me. Sorry about that. Fighting with something here. But the basic idea is to let the computer find that strong trend that I've defined, let it find a tight consolidation. Again, I've defined it. Go ahead and find a breakout. In this case, I'm looking for a new candle that's giving me a daily high, but not just a daily high, but the high of the last 4 candles. So I see that the bulls truly are stepping back in, and I'm doing that while looking at a universe that I defined. In this case, it's about 750 tickers. It's the S&P 500 and the CBOE's top 400 tickers based on options volume. Each month they put out that list. And that it's basically a ranking of every ticker that has traded options that month. So here's an example. You can see we've got that strong trend underway. This was within the last week. It may have been Monday, I can't remember. But we had that strong trend underway, a tight consolidation. The bulls were stepping in. I didn't get the screenshot taken in time, but I bought basically at the top of that box as the bulls were breaking out of that tight consolidation. I trade options in large part. So I bought calls here. I bought the 70 calls on September for Otis. Had a little bit light on open interest, but I had plenty of delta, plenty of time till expiration. I was able to get a $7,100 position, which was far less than my max risk that I would allow myself. My goal was easily attainable. It was about $1, maybe it was $2.50, something like that. It was around 80 bucks when I bought. Had a pretty tight stop right below that box, that support level. Again, kept my stop price down. But that's what it looks like when I'm trading with my rules, using the computer to help enforce the rules, using my own discipline to enforce those rules and my goals. Let's talk about that second setup. It's a small pullback in a trend. Again, that strong trend is underway. I'm looking for a small pullback. So how do we define small pullback? I won't steal Doug's thunder from later today, but one of the ways I do that is using a trap, which there's no magic in any particular set of moving averages, but using a shorter moving average and a longer moving average that are both less than the trend. So if I'm using the 17 EMA as my indicator of what the trend should be, then I'm going to use 2 moving averages that are smaller. I might use the 5 simple and the 10 simple. So that if price is pulled back below the 5 simple and remains above the 10 simple, we know that it's a small pullback in that uptrend. Or we could use the 3.8 or the 2.9 or the 7 and 3. There is no magic to the numbers. The numbers are the ratio between the moving averages and your trend indicator, and how well you use them with discipline. Again, I'm looking for the support to have held, because not only does that show me that, give me confidence that the bulls are pushing, but it also gives me a protected close place to put my stop. So here's what it looks like. Again, you can see that that strong trend is underway. We had a small pullback. I know these gray lines are about 1.5% apart. So this was about, what, a 3% pullback. It held support level there that it had tested several times as lined out by the previous highs. And the bulls have stepped back in. Pretty simple. Again, this is LTA using it to find my setups for me and alert me to them at the right time. I'm looking at that S&P 500 and CBOE top 400. Again, combined, it's about 735 to 50 tickers. I can't remember exactly right now. I've got that rising 17 EMA. I've got two different definitions of what that small pullback is. Again, what does small mean? And then I've got a white candle showing me that the bulls are stepping in. And in fact, I'm being alerted when it's a 2 candle high. So it's a high of not only the current candle, but the previous candle. And that's what's showing me that the bulls stepped in, and then alerts me to them. So here's an example. Again, this was earlier this week, was Wells Fargo. I honestly don't remember what day. It might have been Monday or Tuesday. I don't recall. But Wells Fargo was alerted to me. It was in this nice strong trend. It had pulled back, was holding a support level. I was able to buy the calls, had tons of open interest, plenty of delta, plenty of time to expiration. Got a nice little position, picked up 15 contracts. This goal number is wrong. That should have been 1,200, I believe. I used the theoretical price model to tell me how much of a move do I need to see before I can reach my goal. And I use the same thing for calculating what's at risk to the stop. That's basically it. I will make an offer to you here in a moment, but basically I use live trading alerts as a tool to help my efficiency as a trader and to make me more productive. I don't have to flip through charts, and I did that for decades. Boy, that is a pain. Being able to flip through charts and happen to catch the right setup at the right time is hard to do. That's why I use the computer to do that. Like I said, I'm partial because LTA is my baby, but I believe it's a great tool. It alerts me exactly when I want to be alerted to exactly the setups I want from exactly the universe I want to trade. And then it's up to me to execute based on my goals, my rules, and my discipline. That's it. And the offer that I want to give you, exclusive here for traders, exclusive. If you could push that out, I would appreciate it, Sherry. But basically, you go to livetradingalerts.com/exclusive-offer, and you can get a 14-day free trial and then 50% off the cost of the first month from LTA. Something a little bit different about LTA than a lot of software is you get access to me, which means you can come to me any day during market hours, and I will walk through questions with you. I will help you set LTA up to exactly the setups you want to trade and have it alert you to at exactly the time you want to be alerted. That's not always available from a software company, but that's a nice thing about dealing with a smaller software company. So that's the offer, and that's the process. I hope you got something out of this, and I'll be open to any questions you have right now.
Yeah, ask away, folks. We got about 15 minutes before we can let Ed off the hook here. So who's got questions? You're too fast, Ed.
Well, I was trying to keep it fast. I didn't know what the intro would be, and I know we need to keep it on time. So.
Okay. Well, I did put up the exclusive offer, and I did put up the other two. Can you tell us a little bit more about that goal setting spreadsheet? Like, do you have a copy of that and show them how to use it?
Sure. Let me.
I think you might have. You do have a few questions there.
I'm not seeing them for some reason.
Okay. All right. Well, then how about this? Let me see if I can. Let's go here. Okay, so for the person saying that they missed it because the sound wasn't working, please go out and come back in, but we also will be posting a replay of this. I have someone asking, hi Ed, how many trades do you usually get on the 2 setup, daily, weekly?
It depends completely on the market, but as a rule, well, if we look at today's market, this is the SPY. What do you see when you look at that market? It's been grinding sideways for 2.5 weeks here. So this is not a typical market. Again, I'm a trend trader. So it's not going to be as many in the last 2 weeks. But as a general rule, I have more trades than I can possibly take. You know, my 2 trade alert windows, and you can see that there have been a bunch of setups each day, each time it meets my criteria. I would not be taking these now. This one's been grinding too much sideways, but you can see it's a tight consolidation here. It's at the high of the day. It's just not quite breaking out. But as a rule, I will get more than I can possibly trade. I will take 2, sometimes 3 trades a day, but that doesn't mean I close that many a day. That's how many I'm entering. I will end up closing 1 or 2 on a daily basis as a rule. I don't know if that helps, but it's truthfully going to be completely dependent on the market. If we have the market doing this, there are going to be less trend trades. If you have the market doing what it did over here in March and April, there are going to be a lot more. But as a rule, there are always going to be more than you could possibly take. I don't care if you're Warren Buffett, you won't have enough money to take them.
Oh, wow. Okay, so I have Donna is asking, do you not confirm the LTA setups looking at those symbols identified?
Do I not? I do. Every time I am alerted, I will look at it. So here's a pullback. It's not doing what I want. That was an older alert. But yes, I will look at the chart. I have to be able to see the trend. I have to be able to see a support level. I have to be able to see either that tight consolidation or the pullback, and I have to see the bulls stepping in. So I'm not just going to enter a trade without looking at the chart. I always look at the chart. But I'm letting the computer bring those charts to me. I'm not flipping through all of the components of the S&P 500, hoping to stumble across this at the right time.
Good point. Ari would like to know, what is a 3/8 trade?
I'm not going to steal Doug's thunder, but basically it's using the 3 EMA and the 8 EMA to define a small pullback within an uptrend.
Okay.
It's just a specific type of small pullback in an uptrend.
So then I also have Drew asking, how do you define consolidation?
I'm using, I think I talked about this, but my consolidation parameters, I'm looking for 4, and sometimes I will have this set to 5 candles, and it's going to have a maximum price rise, so close price rise of 2% within that 4 or 5 candles, and a maximum high-low range of 3% in those 4 candles or 5 candles if I've had it set to that. So that's how I define it. And out of those 750 tickers, it's 110 tickers that are meeting that particular criteria now. So that's how I define it.
Excellent. I've got a couple of people asking what's the regular price after the first month.
$97 per month is the ongoing price. And by the way, that's a brand new that's a price drop that I have just announced. That's the first anybody's heard of it.
Haha, jump on it, folks. And then Malcolm says, I've been using LTA for over a year now, and it has fundamentally changed my trading profits. I will not trade without the program now. Kudos, Ed.
Well, thank you. Thank you.
Awesome. So we still have time for a little bit more. You were going to elaborate on that spreadsheet, right?
Sure. There we go. So it's plug and play. It depends on, I just use 25,000 because I coach people with this, and that's a good starting point. But you make that number whatever, 5 million, 5,000, whatever the right number is. Pick a number of weeks you're going to trade per month. As I mentioned, for a new trader, I will tell them 20% is a good starting goal. Make 20% per year. And then if you blow that away, great, we'll raise the goal. But let's start with something realistic. That's typically where you want to start at. And then you set a position size. I recommend 4% or smaller. That just gives you, particularly for a new trader, gives you more time to learn. And in other words, more catastrophes you can get past without blowing out your account. And those number of trades per week, it's something, fairly simple. For a day trader, maybe that's going to be closer to 50 trades a week. For a long-term position trader, maybe it's closer to 4 or 5 trades a week. It all depends on you as a person.
Perfect. So I do have a few other ones for you if you're ready. And
Sure.
I know you're always ready, right? So Deborah says, hi, Ed. Thank you for this. I think you said, wait a minute, just moved around. Okay. I think you said you use the daily to trade with only the 17 EMA. Is that correct?
That's correct. So this chart has nothing but price and the 17 EMA.
Okay, cool.
There are, depending on what a person asks me, a trader or somebody I'm coaching, I might add other indicators or other, whatever, but this is really all that I use. All I care about is the price action and that the trend's in place. And truthfully, you don't need the 17. Once you stared at enough charts, you can tell that's a bullish trend, and you can tell it's a pretty strong trend. But I use the 17 as my rule within LTA so that I can specify how strong the trend is. I use that 17 EMA as my metric.
Okay, awesome. How do you determine the amount of trades per month on your spreadsheet? Is it a risk ratio or market dependent ratio for yourself? Thanks. From Peter.
Peter, how much are you going to focus? If you're trying to trade part-time and you're not willing to invest full-time into it, that's going to be a smaller number. Remember, this is a business. This is not a lottery ticket. This is not just something you set and forget. These are trades with money at risk. And so you need to be able to watch the charts. You need to be able to check on your trades. And if you have enough time to do more, then raise the number. If you have very little time, maybe it's going to be a very small number. It also depends on your trade horizon. As I said earlier, if you're a long-term trader, maybe you're only going to take, 3, 4, 5 positions a month. On the other hand, if you're a day trader, maybe that number is huge. Maybe it's 50, 60 trades a month. It really depends on your time horizon and how much you're going to focus on trading.
There you go. So Maverick wants to know, do you trade crypto altcoins? And if so, which one?
No, I don't.
Okay.
That's outside of my wheelhouse. And frankly, as we talked about earlier, I've got more trades in stocks, and specifically the options on stocks, than I could ever, that's going to fill up all my money. I don't need additional things to put my money into.
There you go. Is your service including the software?
Yes. So I'm not selling a service per se. It's the software. It includes the data feeds and everything, and my support, as well as my support staff. But my support in setting this up for your specific trade setups. Maybe your setups are not my setups. That's great. There are hundreds of scans built into LTA. And there are tens of millions of different ways we could set it up with scans and alert criteria so that it finds your setups and alerts you to them when you want to be alerted. So it needs to be personalized to you. What you're buying is the software, it includes the data feed, and includes the support.
Awesome. Let's see. We still have a couple other ones here. I will tell you this though, Jose says, I requested 2 patterns to add and the same day he programmed it for me. Amazing customer service, quick response, 5 stars. So there you got another backup there. Will says, when setting position size, is this the dollar amount you're willing to lose or the total invested in any one stock?
The position size is percentage of your account, but
there you go. Okay.
the loss size is percentage of the position. So in this case, it breaks it out for you here. So if the average trade size is 1,000, that's 4%. And if your loss is 5% of that 4%, it's $50. That's what it comes down to. So the loss size is of the position is of the account.
Okay. Let's see. Okay, Drew wants to know, how would you use LTA if you are a working person?
Well, I traded like this for a long time. You have to understand how to put in order bundles, but you could run LTA after hours, 7 days a week, and get your scan results. And if you are then able to look at these scan results, you can then pick out which ones you think are going to trigger. You would not be able to use the alerting portion of it, but you would have the scanning portion of it. And then you would put in an order bundle, or a limit order to buy at a certain price, and one triggers other to put your stop in place if that buy is triggered, and so forth.
Perfect. All right. Ari wants to know, let's say I'm not the sharpest tool in the shed. Do you have a strategy that someone like me can do?
Well, it's not brain surgery. The truth of the matter is, we have to know what you want to trade in terms of a setup. I believe a very simple setup is, I'm a simple guy. So those 2 setups that I trade are about as simple as I can make a trend trading strategy. It is a tight consolidation in a trend, and yes, these are all available to you. And there is a pullback in a trend. And then it's a question of just tweaking it and tuning it to your particular needs. But that's probably the simplest place to start. It's not using many indicators, using only the 17 EMA and price action. That's about as simple as it gets. You don't have to learn any indicators or anything else.
Oh, wow, okay. Someone else wants to know, is this a standalone system or does this need to be downloaded to a computer?
It does need to be run on a computer. So in that sense, it is a standalone program, but it does need to be run on a computer.
All right.
Okay.
Then, let's see. Does LTA send text alerts to your phone? And
No,
that's
it
probably
does
going to be
not.
the last one we can do. It doesn't do that?
Yeah. No,
Does it
I
do
don't
text
believe
alerts
in
to your
phone trading.
email?
No, actually,
And-
if you're not watching, these are real-time alerts. So if you're not watching for the alert, you're better off just working off of scans, because the whole idea was to get you the alert at the right time. And so these are alerts sent to your to your computer in real time, not something you would read your email and act on later.
Okay, cool. All right, guys, that's all we have time for today. John says, thank you, Ed, for the new LTA price. So everybody, you've got those links. We will send out a replay of this tomorrow and over the next few days. You'll get messages from Ed, I hope, and you'll have a chance to really take advantage of this and take a look at it. Anything else, Ed?
That's it. Thank you very much for your time, and thank you for the invitation, Sherry.
Thanks for being with us. I love it when you come in and show your presentations. Have a great day.
Thank you. Bye-bye.
Bye now. All right. Wow, that was great, right? So I want to remind you guys that tradersexclusive.com is where you will find a lot of tips and techniques and strategies that you can go to our website. It's also where you're going to find our archived webinars. You go to the website there and you click on Trading Education Webinars. And when you do, you come to this new page. It'll show you all the dates that we're going to have our next webinars, and they're always live. And then to see past webinars, you click here, the green arrow's pointing at the word here, and then you come in here and there it is. You'll be able to scroll right through and see everything else. And our next speaker coming up is Doug Campbell, and he is with Right Way Options. He's going to talk to us about the 3/8 trap trading strategy, which someone did ask about, but Doug is our expert for that. He's been involved in the market for nearly 30 years. He was going full-time as a stock and option swing position trader 15 years ago. He operates the Right Way Option trading room, offering trade alerts and live daily training during market hours. He produces a daily morning market prep YouTube video evaluating market condition and offering watch list charts and possible trade setups for evaluation. Doug, that's quite a mouthful there. So I'm sure everybody's looking forward to you taking the reins here and showing us what this is all about. And I've just made you presenter, but I'm also going to change you to organizer so you can see all of the questions. Everybody can type in their questions as they like or make notes, but probably going to answer the questions at the end, right?
Yeah,
oh, I saw your screen for a second there. There you are. Hello.
Hi.
Do I say 3/8 trap or is it 3/8? I'm
we
very
usually just call
non-terminology.
Yeah, we just usually call it the 3/8 trap.
Good. Okay. 3/8 trap. All right. Can't wait to hear about that.
It's
Take it
really
away.
a cool strategy, and I'm excited to share it with everyone.
Awesome. Well, take it away. It's all yours. I'm going to mute myself now. You just let me know when you want your link up.
Okay, awesome. Well, hey everyone, thanks for being here today. I truly appreciate it. You know, one of the things I need to do is I need to share with our background person, Donna, who does a lot of correspondence for these kind of things. Excuse me, little allergy thing going on here. I've changed quite a bit from my picture. If you guys can see there, the picture that you're, I've actually lost 100 pounds. That's me right here at my trading desk.
Wow, I think you need to send me a new headshot.
So it's quite a bit different. So I get kind of wound up and cranked up when I talk about this strategy. Just to give you a quick background. Oh, thank you. To give you a quick background on this, I started teaching the 3/8 trap a little over a year ago, and I've offered up 18 different classes at $250 a piece. It's a 3-hour class for the 3/8 trap, and I've sold out 18 classes over the last year doing it. And the cool thing about it is, guys, is that it is a strategy that anybody can use and learn. And I'm not going to spend any time with slides if you guys don't mind. I'm going to jump right to some charts. And I want to show you what the 3/8 trap strategy is all about. So first, what I have up here on this chart is the 3 and the 8. And if you look, this is a Pfizer chart, as you can see. The 3 and the 8, there's really nothing magic about the 3 and the 8. And we call it a 3/8 trap because it's easy to scan for it. And by the way, I fully endorse the LTA scanner because you guys see I'm running it right here. This is one of the pre-programmed scans in the LTA scanner. You don't even have to do any, you just turn it on and it runs, and it's bringing you possible trades with the 3/8 trap. And when you take a look at the 3/8 trap, it's really a very, very simple strategy. Ed was talking about those two patterns that he typically trades. And I think most folks would agree, if they look at charts, the most common pattern in the market that we see is in a trending chart, we move up and pull back, or we move up and we consolidate. Okay. And obviously, if we're moving down, we move down and rally back, we move down and we consolidate. And all of these respond to trends in the chart. Now, I'm an absolute simple trend trader. That's all I want to do. I suffered like a lot of people suffered for years and years and years, trying to be something that I wasn't. Trying to just be the jack of all trades. Well, what I did is I refined my trading strategy into something very, very simple and something repeatable. And the neat thing about this is, guys, anybody can do what I do. I am dead serious about that. Anybody can do what I do. And if you want to learn the 3/8 trap, it really is kind of as simple as removing the price action from the chart and just going through chart after chart after chart and see how many times this pattern sets up and how much money could have been made if we just waited for the trade. So what is the 3/8 trap? What we're looking for is we're looking for a trending chart like Pfizer here. We're looking for a chart that's either resting or consolidating over toward trend where the 3 stays above the 8. And then we're looking for that entry signal to occur. Now, and I truly mean this, I'm waiting for the entry signal to occur. I do not anticipate trades. I don't try to predict when the market's going to turn. I literally make the trade come to me. And so I see that 3 and the 8, and the 3/8 is just that visual identifier that shows, hey, we are getting close to a trend. Now, the best trades, the very best trades are when we're very near trend and when we're very near a price support in the chart as well. These are the very best trades that you can find. And I can tell you guys, if you follow a set of rules and you're very strict to these trades, you will find that this trade wins at a high expectancy rate of 70% or better. You don't even have to be any kind of a fancy trader. You don't have to do anything crazy. You don't need any more indicators than just what I show here. and just follow the price action of the chart. Now, I'm going to recommend that you follow the rules that Ed talked about in the class before, because there's a big difference in a chart that shows a candle like this where we can enter at a low risk to our stop loss, and a chart that gaps up like this and we feel that need to chase. This creates a tremendous risk to the stop loss, and we shouldn't be taking those. Even though the 3-8 trap is showing up, we may not be able to trade it based on the price action. But I want you to go through charts. Just put a 3 in the 8, remove the price action, go through charts, and I want you to see just how many times this pattern sets itself up and how many times this works. 3 holding above the 8, there's a winning trade, winning trade, winning trade, winning trade, winning trade, all on one chart. I don't need a whole bunch of charts to trade. I need just a few good trending charts, and I wait for the price pattern to develop in the chart, okay? Now I see folks are typing questions. For some reason, they're flying. I'm not able to read them because, oh, here we go. I'm extending it out so that I can see those. That last question, is it on the high? I use the last. Now, it really doesn't matter if you change the 3 exponential moving average to the high. Take a look at how much change did that really create? The only difference, the only reason you might want to do that is if you're trying to capture more charts in your scan. I'm not. I get more trades than I can possibly trade just keeping it tight. And by the way, I want the tightest entries I can find into a trade. One of the reasons I'm showing Pfizer here, guys, is this is a recent trade from Right Way Options. I'm going to show you the Right Way Options trading room here for a second. Here's our Right Way Options trading room, and we have an app here where I can send out alerts and trades, okay? All of my trades, every single trade I make, long, short, win, lose, are posted in that alert. You guys can get them if you're home, if you're at work, if you're on the road. You can get the alerts that I post on these trades, okay? So it's always available to you, no matter where you are, comes right to your phone. What do the lines look like with current price? Let's put the price on, and I'll actually show you my entry into this trade. There's the price action in the trade, okay? Now I actually entered this, here's the trend. I actually entered this trade on that candle, stop loss right underneath here. This trade held, and we moved up. Now I ended up selling this trade up in here. Let me show you my drawings on this chart. When you look at my charts, anytime if you're looking at any of the charts I post on YouTube or anything like that, anytime you see a pink line like this, that's a price alert, where I've identified the pattern for a potential trade. Now, the only reason I didn't trade Pfizer here, because it just posted earnings, and I didn't want to buy back in just ahead of the earnings report. So the only reason I'm not in that trade right now, okay? Absolutely, it can be used on any time frame. Let's take, for example, let's use the Dow, the diamonds, and let's go to a 5-minute chart. Can we find 3-8 trap trade setups? Well, there's a beautiful one that's happening right here, right now. There was one that happened over here. This was a 3-8 trap short setup. Look at the 3-8 trap long setups in here that are easy to find and easy to trade, any time frame. And I'm going to show you some charts for those. How many of you don't work full time still and can't trade these really quick trades and want something where you can trade a little bit slower? Something that you can manage while you work full time and don't have to worry about it. Well, let me show you a couple trades. I'm going to go to a weekly chart, and I'm going to show you a brand new trade that I just entered. Exxon Mobil. I'm up in this trade substantially already. My entry candle is here. There's the 3A trap, and we're following through to the upside. So here's an easy trade on a weekly chart that doesn't require a lot of management. Let me show you what you can do with something like that. This was a recent trade we closed in right way options. The entry was in 3M. Here's the trade right there. This is the 3A trap. 3 crosses above the 8, holds above the 8. Buyer step in. We entered that trade. We were in this trade 8 weeks. Notice almost no pullback. Now, almost no bearishness showed up in that total period of time, 8 weeks on that trade. Here's another recent trade. Longer term, take a look at Altria. Here's the 3A trap right here, breaking a big downtrend in this chart, rallying right here. There's the entry signal. We entered this trade 11 weeks to the upside. Closed this trade before earnings and missed that big down move. 11 weeks on that trade. So this does not have to be a short-term strategy. This can be any time frame because all it's doing is following price action in the chart. So if you're more of a swing trader, use that daily chart, look for those price action setups. Now there's a couple questions that always come up. And I want to make this very, very clear. If we see a time period in a chart, and this is a confusion all the time because a lot of times we look at charts and we're looking for crossovers, okay? We're looking for crossovers. This is not a crossover strategy. As a matter of fact, I avoid the crossover. And here's why. So many of the times, and if you go back and do the calculations and test this, you'll find this to be true. I don't think my stats are going to be that much different than yours. When we cross up, we still have yet to prove that we're going to hold as support. So it's not a crossover strategy. 3 crosses over the 8, we can easily cross back down and fail. I require that crossover up to prove that it's going to hold. So I need to see those buyers coming in after that crossover up in some nice little pattern. We cross up, we rest here, there's an entry signal. We rest here, here's an entry signal. Those are the easy trades. Now, can you do all kinds of other things? You can, but here's the thing. When I trade the crossover trade, I can tell you this honestly, guys, over all of my history and keeping the stats, when I traded the crossover trade, I win about 50% of the trades. Now, I don't know about you. It's not about the quantity of trades that I trade. It's about the quality of trades that makes me a good trader. I have to stick with the quality, and 50-50 win-loss ratio is not good enough for me. Okay? I know when I follow this strategy, when I wait for the trade to set up, I win at a much higher percentage. Now, I didn't tell you you win all the time, right? You still have to have good risk management and follow a plan in your trading. You can't let a trade that looks good that fails get bad on you. Here's a good little 3/8 trap potential setup right here. Your stop loss had to be in here. And if you'd have had that stop loss, it would have stopped you out at a small loss rather than taking the big hit. So we still have to manage the positions. We still must manage those trades, okay? Now what I do is I take the alerts that come to me in the LTA scanner and trades that I find as I'm going through looking at charts. And I actually see this list over here. I actually, from this list, I go through those charts and I set up price action alerts, okay? So if we look at a trade like XLP, right way options is holding this trade. We entered this position over here in this trade. We're still holding this position. We've got a very nice profit in the trade. We did sell calls against this to hedge the position when it pulled back, and I'm still holding those short calls. But I want you to notice that right now we've crossed back up and we're setting up the possibility of another 3/8 trap long. I have to wait for the next entry into the trade. But over and over and over, this simple price following pattern provides very good winning trades in really any market. I'm going to go one step further, guys, and I'm going to throw over here, and this is a paper trade system, but I'm going to come over here and I'm going to show you that I use the exact same setup when I trade the Dow E-mini futures. This is the 3/8 trap. Look at these trades. This is a 333 tick chart. It's the same strategy. Over and over and over, the 3/8 trap performs on any time frame, any market that you choose to trade. You do have to follow some rules. You do have to be strict to some rules. Okay. When do I enter? I enter on the bar that sets up. Okay. So take a look at like MT here. Okay. When I get a trade and I have a price alert on this, I'm typically going to enter on the bar that crosses my alert. Okay. Now I didn't enter MT. And why didn't I enter MT? Well, first off, I don't like the risk to my stop loss here. Okay. So I didn't enter that trade. However, I am watching and waiting now on this trade because we have a trend. And if that trade follows through, pulls back, I have a trade set up. And I just repeat this process over and over and over again. And I just trade the two patterns too. And we call the one a pullback opportunity. So first off, we're looking for that chart that has concise price action. And I think this is important as well, guys. Quality of trade is more important than quantity of trade. And we tend to be like a dog chasing a car all the time. It's a very difficult habit to break when we chase. We see a candle like this and we just want to rush into that. Oh my gosh. And what I find most of the time, guys, when I work with traders, and by the way, I coach individual traders almost every day in the market. And I find the same examples come over and over and over. We chase a trade. Too often we're chasing the big white candle. And when we do that, we don't realize that the risk of that trade is substantial. I don't do that. I literally find the pattern that is setting up and I wait for the trade to come to me. So I find the pattern setting up and I wait for the trade. So can you guys see how this nice little consolidating move in here was pretty easy to follow to the upside? Beautiful 3/8 trap that's set up right here. Place a price alert, make the trade come to you, stop loss goes right underneath that area. There's another winner of the 3/8 trap. And if we go back through this chart, I want you to notice just how many winners you could have had here just trading one chart, doing it over and over and over, trading the pattern. Okay. So I trade this with either both stock or option trades. It really doesn't matter to me. The reason I trade options may be a little bit different than what people commonly think of options. I think the option industry has become too much of a gambling casino. I trade an option because I'm making the choice, okay, that I want to replace the stock trade with an option trade. To me, there's no difference in the chart pattern. It's either a trade or it's not a trade. And I make the choice based on good quality options, how much open interest there is in those options, those kind of things, and how I want to use my money efficiently, whether I'm going to use the option or buy the stock. Okay, so it's not just I'm all just option trader because I've sold my soul into options. That's not the case. I choose to trade options if the quality of setup is there and the quality of options are there. Now, typically, if someone's asking about my rules, I'll give you the really quick rules that I use on my option trades. If I'm doing a directional long call or long put, I always trade an option. And this is always, you can ask anybody in Right Way Options, they never catch me doing anything other than this. And I share every trade I make with the members. And that is, I buy an option that's somewhere between 70 and 80 deltas for any long call or long put every single time. Okay. I always buy an option with 60 days plus to expiration. Because if you guys ever bought an option with too short a time frame, let's say you buy in this pattern and then that stock just decides it doesn't want to move. And before you get a chance to get this to move, you've already lost too much in the theta decay because your option contract was too short. Okay. But let's be clear as well that I also trade long-term option positions. It's not uncommon for me to post trades to folks in Right Way Options where I'm buying the January 2022s, January 2023s, because my whole intention is to run that trade for a long period of time in the trend and sell calls against it the entire period I can hold on to it. I'll give you a quick example. I am actually in Walmart, and I told everyone that would listen to me about this trade. Here's my entry into Walmart. I'm still holding this trade. I'm up over $75,000 on Walmart. There's the 3/8 trap. Okay. I don't have time. I really don't have time to give you every single in and out and every rule of this strategy. But if you guys have questions, I can see your questions. Please ask those questions because I want to answer those. And I know this to be true. If you've been struggling as a trader, if you're losing money hand over fist, if you start adapting this very simple trend strategy, it just plain works. Now, here's the thing, guys. Why does it work? Well, one of the reasons it works is because institutions control the majority of the money. Would you guys agree with that? Institutions right now have about 86% of all the money that's in the market. The reason stocks trend is because institutions are supporting them, and they're not in it for short-term moves. Okay? They're not in it for short-term time frames. So when a stock starts to trend, all I have to do is identify that trend and wait for the next entry into the trade. Okay, just follow the trend. Just wait for the next entry into the trade. Does the bar have to touch the EMAs for the trap to take place? No, it does not. But what we're really searching for in the scan is we're searching for that price action where we're in a trend, either up or down, and we're looking for that price to be trapped in between those two averages. So we're looking for that nice mild pullback, or we're looking for that consolidation that holds in there. No, I trade, what I showed is I trade, well, a 333 tick chart futures chart. If I'm going to day trade, that's all I trade is futures because of the tax ramifications. It's easier. I'm lazy. It's easier than having to record every single transaction in my taxes. So I just use futures. But I trade lots of dailies for swing trades. I trade weekly charts for longer term position trades. And by the way, guys, over on my YouTube channel, I have full classes on that. You can see what I do on the YouTube channel. Does it have to be over the 17 EMA? Good question. We have an indicator on TC2000 that's really, really cool. I'm gonna get rid of all of these lines. Let's go to that Visor chart, just for example, because we have a nice a nice clean upside trend here on the daily. And by the way, I look for that. I look for concise price action. I don't like to see bars with great big swings to the upside and big swings to the downside. Those aren't interesting to me. I have less edge on a trade like that than when I have a stock that's just doing this nice grindy consistency in the trade. Okay, and what I want in this position is I want the trend. Now we have an indicator, it's called the volatility stop indicator on TC2000, but honestly all it's doing, and I'm going to turn it on here, all it's doing is showing us the difference between the downtrend and when we're in an uptrend. Okay, and all that really is, if I turn on the 17 EMA, is the 17 EMA. So if you don't have the volatility stop that'll flip colors back and forth, this is one of those very, very cool things that you will find helps really, I mean, it helps a ton in keeping you on the right side of the trade, right side of the trend, without the need for predicting, without the need for second guessing or, you know, listening to all these pontificators out in the market that don't care about your money. Just look at the price action of the chart. Now, let me show you something with the volatility stop. And this is essentially the 17 EMA. And I will tell you, if you want to win at even a higher percentage than just the 3 and the 8, if you put the 17 on and you wait for the trades where the 3 and the 8 hold very close together to the 17 EMA and those buyers step in, that'll be one of your best winning trades. You will have an even higher winning percentage with that. Remember, I said it's about quality of trades, not quantity of trades. If you guys have been abused in the market and had your accounts kind of tore up here recently, being pickier about this setup will start building your confidence back. Only take the highest quality setups because you'll win at a higher percentage rate. You'll grow that account back faster. You'll see better wins in the trade. Now, there's a question out there about target for Walmart. Because I'm trading Walmart on a long-term hold, I have no specific upside target, okay? I can tell you that I use this strategy over and over and over, and on longer-term trades, you never know how long a trade can go to the upside. Let me give you an example of a couple of those trades. BDX, weekly chart, get my drawings on here where you can see it. This was my entry in BDX. My exit was up here, 80 bucks to 220. How long does a trend last? I can't tell you. I can tell you it can last way longer than you expect it to. Okay, so I just stay with the trend. And I can just enter any point in here or add to the trade, keep trading, keep utilizing the same strategy to add to it, take away from it, put back in, and trade that trend as long as it exists. So this started in 2013 and went to 2018. How long can a trend last? A lot longer than you can imagine. Okay, so following this strategy, you could find those entries, easily enter those trades, and then just work that strategy back and forth. You don't have to hold the full period of time, but just follow the trend. I don't. The question is, do I still take the trade if it gaps big? No, I don't. And the reason I don't is because I literally plan my trades. If we take a look at a stock like, I've been mentioning STLD here recently, you can see STLD set up a great 3/8 trap entry here, okay? But keep in mind that if I entered here, great. If I can enter that trade, I have a low risk entry. But if that stock would have gapped up big, gapped all the way up to here, then if I planned my trade correctly, from my entry to my exit on that trade, this has way too much risk for me to take it, so I avoid it. If I miss a trade like that, that's okay, because there's another one coming just around the corner. All I have to do is wait for the next setup. Now, one of the problems that I find with a lot of traders, they'll see a chart like this, guys. They'll see a chart like this, and they say, oh man, I missed it. And they spend, that's the only second they spend with the chart. They never give it a chance to do it again. So what I do with this is I mark up the chart and I wait for the next entry into the trade. So I create a watch list of these good quality trending charts. And you can see over here, guys, these are alerts for trades. These are alerts for trades where I've been watching these price patterns, waiting for these trades, and sometimes multiple times into the same trade, where I'm waiting for trades to set up. Okay, I do this all day long, looking for trade setups. Here's one that failed. One of the reasons that I don't anticipate the entry, notice I have a beautiful trade setup. I have a trend in here, but I literally make that trade come to me. No anticipation, no prediction it's going to go up from there. Because I'll tell you, because I wait, I miss a lot of these failure trades that fail. No anticipation, no prediction, just follow the price pattern of the chart. So I go through charts like this, and I'm constantly looking for those setups, and you can see there was a setup here, setup here. I still got these alerts on here. There's a setup. Here's a setup in here. And just follow those charts up for as long as they continue. Let me show you a chart in KHC. KHC, old boring stock. Here's a weekly chart. Our entry right way options into KHC was down over here. Week upon week where we just went up in that chart. We made great money on the weekly. We can do that over and over if you're following a weekly pattern. If you want to trade faster, go to the daily. And by the way, is there anyone that's listening that likes Heikin-Ashi? Well, what I do is I actually teach on the YouTube channel a strategy where you can use the Heikin-Ashi on a daily. We change the moving averages to a 2 and a 6, and we follow the same pattern. You can go to the daily. You can use it on the 4 hour. Look at this beautiful 3-8 trap setup here. It's actually a 2-6 on the Heikin. Easy trade to make. Easy trade to make. Winner, winner. Okay? Easy trade to make. Over and over and over it produces. If you want to slow it down, go to the daily. Look at the price pattern trades that are setting up in here. Okay? So set up the 2 and the 6, and you're going to find the exact same patterns setting up in that chart. Now keep in mind, there are trades that I won't take. I won't take trades, and this is just my personal rule. I don't trade biotechs. My stats over the years have proved to me that if I trade biotechs, I can win quite a few trades, and then one trade takes all the profit away of everything I've ever won because they just collapse on some news event. So I literally avoid high volatility charts. I want simple trades, very simple trades. Last one I'm going to show you here, very simple trade. This was a trade in NIO that we traded over here. Let me get my drawings on the chart. Entry into the trade was right in here. We entered this position. I bought stock on this one, and I added to the trade here. That trade there produced more than $10,000 profit. Okay, this is nothing more than the 3-8 trap. Go to the daily. Nothing more than the 3-8 trap setups on that trade. So very simple stuff. Now what I'm going to do is, Sherry, if you could post in the room, what I'm going to do is offer you guys something simple. If you have an interest in what I'm showing you here, I teach this stuff 2 hours every day to the members of Right Way Options. You can become a trial member to Right Way Options with the link that she's going to share. Yes, I do both long and short positions, yes. As a matter of fact, we just closed 2 trades yesterday that were bear call credit spreads on the QQQ for 48% and a bear call credit spread on the SPY for 28%. We closed those yesterday. So yeah, I will go long or short, and I will use any option strategy necessary to best exploit the price action of the chart. Okay, so the offer is to become a trial member. For I think it's $49, you can get a full month of Right Way Options. We exclude nothing. We exclude absolutely nothing. You get the use of all of the recorded videos that I have on the site. You get the use of the trading room and the trading room app, where I teach a minimum of 2 hours every single day. You also have the opportunity to do these little fun things. Last month, we gave away a $3,000 Falcon trading computer. We're going to be giving another one away in July. The really cool thing with this app, guys, is if you're busy, if you're working full time, you have a smartphone, you can get your trade alerts wherever you are. Okay, wherever you are. Okay. So does anyone have any questions for me? I know I'm running out of time. By the way, I do want to mention really quickly, if you jump over to the Right Way Options YouTube channel, you can watch the classes on these, more detail on the classes on these for both position trading, longer term trading. Position is what I call weekly charting or longer term, shorter term trading, and swing. Do I recommend TC2000? I highly recommend TC2000. For me, it's the best charting platform, hands down, out there. Easy to use, easy to get exactly what you want out of it. I've used it for years, so I have a bias, but I think it is hands down the best charting platform out there. I don't trade the ES, Darren. I trade the Dow E-mini, the YM, and it's just a personal preference. But yes, here's my setup. This is for a 333 tick chart on the Dow using the 3/8 trap. So will it work on the SPY or the ES? Yes. Whatever time frame you choose to trade. I mean, just look at the setups here, guys. One here, one here. This one's not clean. I would avoid that one. One there, one there. This stretched way out up here. I don't like any of these, so holding this one here, you could have maybe squeezed into this one, but I'll be honest, I probably wouldn't have. Okay. No. Is these dots, is this a SAR indicator? No. This is the volatility stop programmed. It's the TC2000 volatility stop programmed into the Thinkorswim system. So it is actually a volatility stop indicator. One of our members actually programmed that for Thinkorswim. Okay. Is Caterpillar a setup? Caterpillar is a breakout trade today. Okay. Remember the rules I talked about? This is a crossover trade. So no. Look how far this would be. How many of you right now would be willing to buy this trade here and have your stop loss down here? Who's going to take a 6 1/4 risk on the trade, or 12, 14 points? No, I want a lower risk entry onto the trade. Do I like the fact that Caterpillar's breaking out? Yes. So I will wait for the next entry into the trade that will give me a lower risk entry into the position. Okay.
I know you don't want to toot your own horn, but I want you to know that John says the YouTube channel of Doug's is amazing with all the free videos. He's been watching them for 6 months now and has learned so much. Thank you, Doug, for all the effort you put into your YouTube channel.
Thank you. I truly appreciate that, John. I do. The subscribership is growing. We're just about 20,000 subscribers now on YouTube. I do share pretty much everything, and I put out a morning video every single day. I'm at my desk at 5 a.m. every single day to put out a morning prep video. Now, I'm going to give you guys a warning. Next week, I'm taking my first vacation, 5 days in a row in 15 years.
Oh boy.
So next
You better
week,
do some recording so people aren't jonesing for when you get back.
I know. I know.
Oh, this has been great. Is there anything you'd like to add to this? We did post the link. Let me see. I'm going to do it one more time. Everybody get that link?
Do you need to subscribe to the YouTube channel or to Right Way Options to access the YouTube channel? No, absolutely not.
No.
You can search YouTube for Right Way Options. You can even search for Doug Campbell, and I am there.
I'm just seeing if I can pull it up. We can post the link right in here.
Surely,
there it is.
Question you had on CAT, would CAT be an entry for me? No. Notice that the 3 was below the 8. I didn't say anything about the crossover or anything about that being the trade. So no, this is not my strategy trade. Okay. Not my trade.
All right. Everybody should go and check out that link for you, because that's going to get them into the club. And I did post the YouTube channel for you, so you should get you some more subscribers there.
Awesome.
I really appreciate you being here with us today. This has been great.
I really appreciate the opportunity. You know, as you can tell, I get kind of excited about this strategy because I've worked with so many traders over the years, and it's just one of those strategies that people have been able to grab onto and really turn their trading around.
Oh, that's
so
great.
Yeah, really cool. Yes, I would say to RC up there, it's too late on STLD. The entry into STLD would have been, for me, I would have placed a price alert through here. And I did note this to everyone in Right Way Options for this trade. Your stop is here. Okay, now since we've pushed up so far, there's just way too much percentage risk to any stop loss for me on this trade. So it's too late on this trade, and that's okay, because all we have to do in a trend that's trending like this, just notice right here, we can stretch up to the upside, pull back, there's another opportunity. So all we have to do is wait for the next opportunity in the trade. By the way, if you're looking for something, take a look at X. X has already started that move where we crossed up, and now we're pulling back. Wait for that next entry into X.
Cool. Hey, I got another testimonial for you from Malcolm. I've been an active trader for 8 years now, and my journey has been typical. Since I've adopted Doug's philosophy of trading and focused my work with the proper tools, I've had 2 years of very profitable trading, making up the losses of the previous 6 years. Sweet.
That is awesome. And Malcolm is an active participant in the trading room. And honestly, he's become value added to the trading room because he's become so proficient at these strategies. He shares in the room when he's making trades, and everyone gets the opportunity to benefit.
Wow. And RC says, well, just testing what you just taught, and I just learned. Thanks already.
Hey, that's
fantastic.
Awesome. That's awesome.
I hate to do it, but we really have to call a stop. You guys get in touch with Doug at his link and get into his rooms and get onto his YouTube channel. And Doug, I hope you'll come back and visit us again.
I'd be more than happy to. Thank you for allowing me today. I want to wish everyone a great day and success with the strategy. Take care, everyone.
Thank you. Have a good day. Bye-bye. All right. I want to bring up our next panelist, and it's Barry Burns of Top Dog Trading. He's going to talk to us about how to trade. Oh, let me switch over to myself, I guess. I got to show you my screen for just a second. Just want to remind you, if you have to leave early, you can get the replay on tradersexclusive.com. I showed you how to get to it. You just got to kind of click around in there. But Barry's going to bring us how to trade pure price action like the pros. And just a little bit of background on him. It's Dr. Barry Burns. He started his study of the markets under the direction of his late father, Patrick F. Burns, who accumulated 70 years of trading experience in his lifetime. That should Barry, you've got a lot of stuff coming in by osmosis there. But just a few of Barry's accomplishments includes being the author of Trend Trading for Dummies, publisher was Wiley. He authored Top Dog Trading 5 Energy Methodology plugin for Metastock, and he's also published many articles for various outlets, including eSignal Central. He's a seminar presenter for several exchanges, including the CME Group and Eurex. He's received multiple years of Reader's Choice Awards for technical analysis websites and trading schools by Technical Analysis of Stocks and Commodities magazine. He founded Top Dog Trading to help students shorten their learning curves in becoming traders. And he's going to be coming with us right now. As soon as I open things up, I think you are self-muted, Barry, and I'm going to make you the presenter. And I'm also going to make you an organizer so you can see what people are asking you, and you can choose to answer on the fly or wait until the end. How are you? Are you with us?
Very good.
There we go. Now you got your microphone. Cool.
Yeah.
All right, I'll shut up and get out of your way. I'll talk to you, and just holler at me when you're ready for me to put your links up.
Okay, I sure will. So yeah, let me just get the right screen up here for, you know what, I'm just gonna have to show the whole monitor here, no problem. Alrighty, dighty, duty, tutti, fruity. All right, let's hope that did it there. So yeah, let me know. I can't see what you guys can see, so if you would, let me know if you can. That's right, I'm the Rubber Man Man. Remember that song?
I can see it.
Man? You can see it? Okay, great, thank you. Excellent. All right, well, thank you so much for inviting me. I'm always thrilled to be part of this presentation, and you guys always bring in great traders. The last presentation was excellent, and mine is hopefully excellent as well. So I tell you what I'm going to share with you today is things that I've learned about price action, and we're going to really kind of run the gamut. We've only got 45 minutes here, but I'm going to share with you some introductory things about price action. So there's something here for the beginners, and then intermediate, we'll get to that level, and then advanced. So something here for everybody. All right, let's get this started. So actually, introduction was beautiful. So I'm gonna just skip through this slide. I think you want to learn more about trading than about me. So let's just go through that puppy. Oh, yeah, I'll just mention too that I do have podcasts. We haven't been too active recently, but we're getting active again. And we'll be doing some interviews with trading psychologists. We've done some in the past, and I've already got one scheduled again for next week. So those, you know, it's interesting. The podcasts on the trading psychology are the most popular. And what we do is bring in actual trading psychologists to talk about it. So we got another one next week, and that'll be posted. But got plenty of, I don't know how many episodes, 37 episodes on the podcast right now. Obviously, all free. Go enjoy. My YouTube channel is very, very popular as well. We're closing in at 100,000 subscribers. I got over 200 videos there. So feel free to go check that out. And I know you've seen the disclaimers before if you've been through the whole event here, but at these multi-speaker events, we get people, coming and going, which is perfectly fine. So I just want to make sure that, in fact, I'm not going to read this word for word. I do encourage you to do it and to either do it here on the slide or one of our websites, because think of it this way. A lot of people do not read these legal disclaimers because they think it's just legalese, mumbo jumbo. It is not just that. This is where your education should begin, because the regulators have done us a fantastic favor by going out there, doing research, and stripping away all the hype. And unfortunately, there's a lot of hype in the trading world. And they tell us, hey, here's the real deal. Okay, here's what you need to know. And so they're preventing us from getting hurt. So really important as you're trading education to read those legal disclaimers. All right, so let's talk about candlesticks here today. Now, I'm not going to get into the weeds with all the different poetic names for Japanese candlesticks. I'm just going to talk about the logic behind the candlestick patterns. And I'm going to keep it super simple here at the beginning. Actually, then we're going to get into a little more intermediate stuff, as I said, and then some more advanced stuff as we go on. And this, I got to tell you, is a big part of my trading system. It's not the only thing that I use, but, indicators, moving averages, all that stuff, very good. I do use them. Volume, very good. I do use it. But the bottom line is the price bars, that's what is. That's what the market is. That's what the price is. That's what people are buying and selling at. And so that is the core of everything that we're doing, and other things surround that. So again, not getting into the weeds with the terminology, but really just focusing on, okay, so what are these patterns? What are these bars really mean in the marketplace? And when I say the marketplace, I'm talking about the people, the computers, the algos, all that stuff that's actually buying and selling. So one bar logic, we'll start with just what does this one bar mean about what traders are doing? So, and whether, I don't even know what time frame this is, but it's, irrelevant really. So whatever time frame you're trading, one bar, whether it's a 5-minute bar, a daily bar, 144 tick bar or whatever, it's all going to be relative to that time frame. So what this bar means is that the market opened down here, closed up here, and that's why it's green. The close is above the open. All right, so like I said, candlesticks 101. And then we reached a high of this during this period of time, and we closed back down here. So there's two key elements to understanding the logic of a candlestick bar. And those two key elements are the range of the bar from low to high, and then the real body. Where does it close? So a meaningful candlestick for trading is one that is a wide range bar, because that means that in this case, okay, from the time it opened till the time it closed, there was a lot of activity, buying, 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 buying. In other words, demand. And the only thing that makes markets go up or down is more demand than supply, or more supply than demand. That's it. If supply and demand are equal, you've got a choppy market, and there is no high probability trade there. And we just wait those times out. Okay, so that's a 1-bar bullish pattern. This is conversely a 1-bar bearish pattern. Again, our qualifications are opens at the high, closes near the low, and the entire range of the body from high to low is very wide range. Been a lot of action. The movement of price has shifted a lot. And then again, when all was said and done, at the end of that bar, it closed near the low. Now, here's another type of bar. Again, wide range from high to low. This one, the real body is a little different. Now, we have, and I did this on purpose, by the way. So we've got a narrow range real body, and it closes above the open. Now, this is where the human mind can trick us. People get very enamored with green and red. Green closed above the open. So they think that's bullish. Not necessarily. On the wide range bars like that, where the real body is wide range, then yes, that is bullish. But there's a lot of noise in the market. Got to think, who's trading? Well, we got people now all over the world, all different countries, millions and millions and millions, hundreds of millions of people, computers, algos, people are trading different time intervals. People have different data speeds in their internet access to execute trades and to see the data, see the candles and all that. So because of all those variables, you can't expect the market to go well to the penny, the pip, the tick, or the little pixel on your monitor. So you got to give it a little bit of, just allow for a little bit of noise. So when you have a narrow range real body, I don't give a mouse's patootie whether it's green or red. Don't let your mind go binary where green is bullish, red is bearish. That's true if it's a wide range real body, but not a narrow range real body. This is just enough for a noise. Now, what's important is it does close toward the lower end of the candle. So, and what that means is this big wick up here, now that's significant. That means that the market has traded. There's been trades that have gone at all these prices. And then when all of a sudden and done at the end of this bar, at the end of this time, the market rejected those values, meaning people said, nah, you know what, that's too expensive, too expensive, too expensive, too expensive. Trades could not be matched up with a large group of people. And when all was said and done, then it closed down here at the lower. And when I say the lower range of the bar, I'm talking about like the lower third of the bar. The lower quarter of the bar would even be better. Same thing here, except the opposite. And again, I intentionally gave an example of a red real body because a red real body, just kind of the mind kind of goes into autopilot and says, oh, that's bearish. No, the key here is the long wick on the bottom. It rejected all these prices, tried them, traded them, but when all was said and done, all the market participants as a group, the mass psychology of it was, nah, this market right now, the S&P is actually bullish. So we're not willing to, you know, we're not getting the people here, very many people. You got some, okay, but we want where the masses are, where the main value is. Now we go to 2-bar logic. So now we understand the very basics of 1-bar logic. So here we get a bearish bar followed by a bullish bar. So these things can turn on a dime. This is why you got to be very careful of getting too enamored with one candlestick bar patterns, because they can, just like this, turn on a dime. So that is not enough to trade with. And I'm going to be showing you, how we continue to build on this to actually trade. So this is a 2-bar bullish pattern because we've got, again, wide range bar on the green bar from low to high, and we close near the high. So this bar negates that bar. This bar negates that bar. It does not validate it, it invalidates it. This red bar now has been invalidated. Whatever happened during this period of time, and as a trader, it doesn't even matter what happened. It could have been news, it could have been an economic report, it could have been earnings, it could have been gossip or rumors or whatever. But when we're trading in real time on the hard edge of the screen, and especially if we're intraday trading, real fast time frames, we don't have time to figure out what happened. It doesn't even matter at that moment in time. It's just where is the supply and the demand imbalance. And later, they'll tell you after the market closes on CNBC and everybody's like, oh, yeah, that's right. Hindsight's 2020. We don't have that luxury when we're trading in real time. And then again, here's just the reverse of that: bullish bar, bearish bar, 2-bar bearish market logic. Okay, then we get again our bars with the long wicks on the top. And so that's a 2-bar bearish pattern, rejected all these values, and now invalidates the green bar before it. So you look for these, especially when to look for them like swing highs, swing lows, right? That's where they become really important in the context of the landscape of the entire chart. And the inverse here, bit of a bearish bar, and that's invalidated by the very next bar. Long wick rejected the low prices. That means that, yeah, People are willing to come in and pay more. And at the end of the 2 bars, that's where it is. Now, what about this one? So we've talked about wide range bars. We've talked about where the bar closes in relation to the high and the low. So the first thing, as far as price logic of the mapping of the buying and the selling, is that we have a narrow range bar from high to low. Narrow range real body. I don't care if it's green, red, or a doji. That is a neutral bar. Any bar that's narrow range is just neutral. And so the logic of this is, all right, we had a bullish bar, neutral bar, therefore the bullish sentiment remains. There's been nothing that's happened that has invalidated the bar before it. Therefore, the sentiment of the previous bar continues to hold. All right, now let's take this and expand it out. Like I say, you can't just trade a bar or two. You got to take it in the big context of the entire landscape of this two-dimensional object we live in and call a chart. So let's get a little interaction going here. Yeah, I don't want you to just sit around here. I want you to actually engage, because this way you'll learn. And we're here live, so hey, let's not, let's not negate the fact that we're here live. Let's take advantage of it. And if you engage, you'll actually learn this stuff even better. And if you get something wrong, don't worry about it. Good. If you get something wrong, you should stand up and say, yippee-yi-yo-yay, I got something wrong today, and that means I learned something today. And I'll probably remember it, because usually when we get something wrong, we tend to remember it more. So here we go. Validate or invalidate 2-bar logic. So look at the ones that are marked here, like this one here. So my question to you, please do be a participant. Type in to the, what do we call it here? Question box, okay, chat box, question box, whatever they call it here. Does this green bar validate or invalidate the price action before it? Go ahead and type that in. Validate, invalidate, whatever you think. All right. So we got questions coming in. I'm just going to read names. I'm not going to read answers. But we got Ari, Eric, Mike, Donna, Dolly, John, Roger, Amal, Thomas, Kior. Hopefully I got your name correct. I apologize if I didn't pronounce your name correctly. Hans, Mura, Jose. Wow, you guys are really participating here. I appreciate that. I love that. Oh, awesome. So congratulations to you, by the way, for participating. That shows you're paying attention and you're really, very serious about trading. So I respect that. Okay, so you ready? So this was a little bit of I kind of set you up to maybe get it wrong. I did that intentionally. I know that's kind of sneaky, but as I said, when you get things wrong, you tend to learn. So again, not going to call out any names for who said what, but this bar here is basically a neutral bar. It doesn't validate or invalidate the previous price action. Why? Because, very simple, there's only one reason. It's narrow range from high to low. That's it. Any bar that's narrow range from high to low is a neutral bar. And therefore it doesn't validate or invalidate, it's just a pause in price action. It doesn't say anything about the future. Now, the way that I set this up for you to help it be memorable and to help you in your trading for the future is the human brain has something that's called forward-looking bias. So I'm showing you a historical chart. And as we mentioned, historical charts, you can all read them, right? It's easy. Oh, I would have bought here, sold there, bought there, hindsight's 2020. And so I showed you the hard red edge of the screen on purpose to allow your forward-looking bias to kick in. So because you see what happened, and therefore this is what we do in trading, that's what we do as human beings, this is what we do when we go back and we look at historic charts to design trading systems, and we look for, well, what happened? Oh, okay, and then reverse engineer that. The problem is that's not really helpful on the hard red edge of the screen. The market isn't that simple and easy to read. So this did not indicate that, even though that happened. All right, now this one, and I'll just give you the rest of the answers here. So this one does invalidate this one because it's, again, wide range bar. So that's the first criteria. It's always wide range, narrow range. Narrow range, neutral. Wide range, okay, let's see what we got. If it opens and closes near the center, like if it was a doji right in the middle of the range of the bar, I'd say that's neutral. But no, you've got an engulfing real body here. So yes, this bar does invalidate that one. What about this one? Again, neutral bar, fairly narrow range, doji, open and close near the same way. So we would just say sentiment remains down. This one, okay, this one does invalidate the red bar before it, wide range bar, and we close near the top, definitely in the top, more than the top 25%. And those are the elements that we look at. Okay, so sorry to trick you, I kind of feel bad about that, but I want to help you as you go forward looking at historical charts to be very aware of this forward-looking bias thing, because it's a culprit. It will really undermine your trading. And that's why everybody's an expert, in hindsight. So now let's make it harder for you. So now that I've done that for you, all right, just kind of taking you to the next step. Let's not show you the future. Okay, so now this is how we really have to trade. So now I'm not going to show you the future. Now I'm going to just go to the hard red edge of the screen and ask you again. Based on the price bar formation, particularly this one, this bar on the hard red edge of the screen, what would you expect to happen next? And you can take into consideration the entire landscape of the chart. So go ahead and type that in. Market go up, down, sideways, or I don't know. There's no way to know, no probability. I mean, again, I don't like using the word know or predict or forecast because we never know what's going to happen. But the real question is, what is probable to happen, right? That's what we trade. We trade probabilities. Okay, so let's see. Oh, my screen is scrolling in the wrong way. Okay, oh, wow, look at that. Yeah, I know. Ari says, that's sneaky. I know, Roger. Okay, good. Yep. So, very good. So I'll just call out names again. Roger, Rob, Robert, James, Kier, Dolly, Donna, Amal, Darren, Thomas, Matt, Mike, Mark, Mura, John, Roger, Fred, Hans. Okay, so very good. Appreciate your responses. Again, not going to put any individual on the line here. So we got different answers. We've got all three different answers have been put into the chat box: up, down, and no way to know, or sideways. That's what makes a market, right? If you're going to buy, you got to have someone on the other side of your trade who thinks the market's going to go down, and vice versa. So we're kind of experiencing that here in answer to this question, which is another great illustration of how markets work. So the way I analyze this is this. So we've got a gap. Got a gap overnight. Now, this gap can either fill and the market go back up and fill it, or it can gap and go, which would mean the market would continue to go down. The thing that makes it more probable to fill is this. Look at this price bar here. Well, first of all, let's start here. So the market gaps down, goes just sideways, nothing really happening. Okay, goes down, stops. Notice again how this big red bar, that's a bearish bar, but the market pretty much stops there. Comes back up a little bit, comes back really right in the range of the opening few minutes here. What is this, a 5-minute bar? Yeah. Okay, so, and then here's the key. We get this bar with the long wick on the bottom, rejection of these lower values. Not only that, but now we have support. This is the low of the day. We come back, we test the low of the day and reject it. And we got a gap overhead. So those are the clues that we have that, yeah, the market's going to go up. So it's testing. Market's always testing different price levels. And what you want to see, now we're adding support resistance. So we add support resistance. Again, as I said earlier, you can't just trade with the price bars alone. You look at what they mean, what it tells you about supply demand, but you also want to look at supply demand at particular levels where the price has been before. Do people think, oh, I think we've tested at this level before, okay, and then it went back up. Is it going to do it again or go back down? Well, wait, it rejected those prices. Buyers came in and they settled in here. And we got our gap overhead. So now much more likely to close the gap. All right, let's do another one. Actually, for time's sake, for time's sake, I've got to, I can't do as many quizzes here as I might otherwise. So no problem. What's going to happen here and why? Well, we've got this high again. We're retesting this, or we're testing this high. So now, something again important to notice that I mentioned in passing before, but I want to emphasize. Remember, the market has noise in it. So it did test this high. Now, it didn't go all the way and test that very penny there, and it didn't even quite reach the real body. I don't know, maybe it did. It's hard to tell, but that's kind of the point. Is again, the noise in the market. Don't expect markets to test support resistance at the very pixel of the line you drew for support resistance on your charts. Okay, as long as it gets in that area very close, might go a little above your line, might go a little below your line, that is still considered support resistance. Support resistance are actually in the dynamic of the real marketplace of bids and asks and buys and sells flying all over the world. Support resistance levels are zones. They're not lines. We represent them as lines. And again, that can get you in trouble if you get too myopic about, oh, the market's got to go to my line on my chart where I chose to draw it on my time frame. All right. So what happens after this? Well, I think most of you probably could get this one, right? So we got our double top confirmed with a wide range red bar. Wide range from high to low and closed just almost right at the low. And down she goes. So we're putting together pieces of evidence, if you think about it that way. This one, look at that big wide range green bar. All right, now they're again bringing in support resistance. If you look in the past, we had resistance here. So you always want to think about, okay, where did people in the past, where did the market, which includes algos and quants and all that kind of stuff, where did the market find that or decide that, I think this is a little too high, it's too pricey? I mean, it's just like the economy, right? If somebody charges you something for a car, popular car, and they might charge more than the sticker price. In fact, I'm actually looking for a car right now for my son-in-law. And of course, he wants a pickup truck. And it's a very popular pickup truck. And they're almost always selling over sticker price. You can't get a good deal on this. Okay, even going on the internet and all that kind of stuff, it's just too darn popular. The demand is exceeding the supply. So no one who's selling them is going to give you a deal because they know they can get a higher price. And so they're going to get that higher price. They're going to ask it and someone will pay it. So back here at this time, okay, and at times this can change because between whatever 10 o'clock and 12 o'clock, maybe 12:10, whatever, people change their mind. Here, people were not that enthusiastic about this market. As time changed, who knows what happened, right? Again, maybe a news release, earnings reports. Well, this is the YM, so it's an index. But whatever happened, maybe there was some rumor, gossip, news that came out, and all of a sudden that changes everyone's mind now, and they say, oh, ooh, we're now into a bullish phase. Prices, this market's worth more now. So we look at these times, we say, okay, has the sentiment changed? And it has. One of the things you want to look for is wide range bars slicing previous resistance. So again, using candlestick patterns in conjunction with support resistance is critical. Now look at this one. Here again, we get a wide range bar closes near the low. So that bar is almost the inverse of that one, about the same range, right? Closes near the low, but it closes at support. And that's it, done. So you want to see it slice through resistance and close above resistance. Okay, so now that's price. But we don't just trade price. Like I say, we've got to trade other things with it. And volume is one of the most important things to trade along with price action. So we want, well, there's a distinction here too. Dollars are in the details, as I like to say. And so volume is not, all volume is not created equal. Are we talking about large volume or small volume? Are we talking about enough volume, but not too much volume, right? Because too much volume could be an exhaustion pattern. And not just large volume, but we want smart volume. So you could get a lot of volume, but it's all retail traders. And retail traders, not always, but generally tend to lose money. More people lose money than make money in the retail trading world. Unfortunately, we're here to try to change that. But we want to trade with the smart money, the people who make money consistently, the professional money. So the key then is, all right, how do we compare professional volume versus retail volume? Because the little volume histogram at the bottom of your charts does not do that. It only tells you the total volume. And the retailers and the professionals, the people losing money and the people making money, they're all mixed in there. So we want to dig deeper. Dollars are in the details. And the detail here is, let's follow the smart money, honey. Now the question, of course, is how? So here's how. You bring up a time and sales window. And there's lots of things you can usually edit in here. Let's see, we got TradeStation. How to set this up, you'll just have to ask whatever your trading platform is, talk to them. They know, how to do it on theirs. It's all a little different, different buttons, where they're located, all that kind of stuff. But what I do here is under type, I don't want to see bids and asks for this purpose. So using bid and ask for tape reading can be very good. I'm not saying it can't. I'm just giving you one approach. So I uncheck the bids and the ask, and I only look at the trades, because the trades are where people have actually committed their money. And people are very serious about their money. So if they've committed their money, okay, it's not just a bid or an ask that they're maybe later going to pull and they change their mind. I don't want that trade anymore. No, their money is gone. They're committed. They're not dating, they're serious. They're married to that market now for this time. So that's what I want to see. Okay, so that column, I keep the timestamp, actual trades, here's your prices, and here's your size. Now, this is how we distinguish the smart money from the, I don't want to be rude here, but less smart money? I don't know, people who don't make money. So we put the size here. Now, this is the NQ. So we ask ourselves, okay, so people who are retailers usually have very small trading accounts. And very few retail traders can afford or even have the margin to trade 20 contracts at one time. Remember, each one of these is a trade. These are each single trades. So very few people can afford to trade 20 contracts on one trade. They just don't have the money in their account. So we're going to set that as a minimum. There'll be a lot of trades that don't show up here. The only ones that will show up are people who can afford to place 20 contracts on a trade. So this gives me an insight, an X-ray into what the people with, at least big trading accounts are doing, or bigger trading accounts. And you can adjust that. I've set it for 20 here as an example. Some trading platforms also have a block trade indicator. Usually it's just called block trades. And you can actually plot it on your chart, which is pretty cool. So you don't need it. You can just use this. Most trading platforms don't have this to add to your charts, but I just want to point it out because you might want to ask your trading platform if they do provide that. And that way you could see it in conjunction with the price action. And by the way, notice something here. Professionals are always getting in early, and amateurs are almost always getting in late. So this is why we don't have volume under every bar, because this is only what are called the block trades. Notice where they show up. They show up at the very beginning of a new trend, and they show up late in an old trend. They're getting in, they're getting out. Now, here's an extra little step you can do. And that is take two time and sales windows, put them next to each other side by side, set one where you're only going to see trades that are 2 contracts or less, so 1 or 2. right? That's your amateur traders as a group. And then here we set it for, what did I say? This one I set for 10. So 10 or more contracts. And that's all I'm going to see here. And you compare. So here, all red. So the amateurs are selling. Here, most of the professionals are buying. So go ahead and type this in. Do one more little quick quiz here. If you saw this, and by the way, look, the prices are the same, 1205.75, 1205.75. Okay, got a couple of 50s in there, but mostly it's 1205.75 or above. Maybe getting a little slippage. So seeing this and knowing that we'd like to hook our wagon to the whales, that the people with the big accounts generally over a large sample of data make money, would you rather be buying at this time or would you rather be shorting at this time? Go ahead and type that in. Yeah. So very, very good. Thank you very much. I just have to get close to finishing up here because my time is about done. So it's pretty obvious, right? You don't have to be a rocket surgeon to figure this out. This is really self-evident. It's easy. And yet most people don't do this. Why don't they do it? I don't know. Well, probably just because nobody's ever taught them. Now you've been taught. I suggest you maybe give it a try. There's some time and sales windows that even more have more robustness to them, like NinjaTrader. This is NinjaTrader. So if you really want to get deeper into it, you can have it color coded when people are, for example, the lime green versus the dark green. Lime green in this case means that they bought above the ask. So it's an aggressive buy. This is a little hard to distinguish here, but that's magenta and that's red. Magenta means that they sold below the bid. So it's a more aggressive sell. And then they also allow you to have a fourth column over here. So here we set it 20 or more contracts. Now, if you want to take it out even bigger, because, hey, you know, there's some amateurs who have a lot of money. They maybe made a lot of money doing something else, and now they're coming into the market. And yeah, maybe they can trade kind of 20 contracts. So if we want to take it even one step further, then we can say, all right, I want to add a fourth column, and I'm going to call these block trades. And the block trades are going to show me, are only going to pop up when there's 50 or more contracts in one single trade. So if you just look at this, we've got red, green, red, green, red, green, red. A little more red than green. But if you look at the people who traded 50 contracts, those are all red. All red. And again, here's how, if you are able to plot the block trade on your chart, actually, here's a way to trade some good breakouts. You've got consolidation here. It's just going back and forth between this channel, and then we get a breakout. Now, there's so many fake outs these days, it can be very difficult to know whether that breakout is going to be successful or not. Now, a lot of people suggest you use volume, look for a large volume breakout. That's a step in the right direction for sure. But again, that volume histogram, the normal volume histogram, is a mixture of retail and professional traders. So if we just look for the block trades, look at this, we got over 2,000, well, got about 2,000 here. Yeah, that's a good trade to trade. That's a good one to take. And so when we take the breakout on professional trading, it goes to the moon, Alice. I'm aging myself here with the honeymooners reference. So let's see. Good. I got it. 1 minute under. So here's what I have to offer today. Unfortunately, and I know you're going to be really mad at me for this, I do have to apologize in advance. I have nothing for sale. So I kind of screwed up there and got nothing to sell you, but I will give you something for free, and it's one of my little mini courses. But instead of just giving you information in this course, I actually give you one of my favorite trade strategies. You see it right there, the rubber band trade strategy. So I'm the rubber band man. So the rubber band trade strategy is a mathematical formula based on the reversion to the mean. Super simple trade. This is why I start you here, give it to you for free. I want you to take this trade. I want you to make
Rubberbandtrade.com.
Rubberbandtrade.com. Exactly, right there. Yep. And
Rubberband.
rubberbandtrade.com. Yep. That's it. So let me see. I think you typed it in, but I'll type it in also just in case. And yeah, and
Yeah, I'm gonna
now,
get it so it's live. Oh,
okay,
it turns into something else. It's a little bit different
it
once
is.
you actually go there.
Mm-hmm.
That will get you there though, guys.
Okay,
Rubberbandtrade.com. Yep.
it's okay.
And you can type in the www or not, and it'll still get you where you need to go. So this is great.
Okay, good, good. So yeah, with that, you get the rubber band trade, of course. You get 5 little videos, about 20 minutes each, interactive quizzes, just like we did interactive quizzes today. And also, I've got a follow-up webinar. It's actually just a recorded webinar, but I'll give you access to that too, and give you my cycle indicator. The cycle indicator I use to time entries with precision. And again, that's all free. And I'll show you how to set up my charts and how to trade it in that recorded webinar. So
Awesome.
that's my
How do we find your
presentation.
YouTube channel? How do we find your YouTube?
Oh, just go into YouTube, and in the search bar in YouTube, just type in Top Dog Trading. I don't know exactly what my URL is there. So yeah, just type in Top Dog
Oh,
Trading in the search bar of YouTube, and
I gotcha.
200 videos there, more than that now. Yeah. Releasing another new one today, by the way.
Ooh. All right, I'm going to share that link too. And
Okay,
you
thank
do
you.
have a testimonial here. Dr. Burns, you are always the best. I follow your YouTube channel. That's the main reason I thought, oh, let's get his YouTube channel up there.
Thank you for that. I appreciate that. Yes. Thank you, Dolly.
All right. Well, I really appreciate you coming and being here today. This has been fantastic. And I hope you'll come and join us again.
Well, thank you. Thank you for the invite. It's been my pleasure. You're a wonderful hostess. And by the way, just
Thanks.
in general, thank you for putting on this whole multi-speaker event. I know these are a lot of work to do, get everybody organized and scheduled and all of that. It's not easy. I've done a couple of them in my day, and I'm like, wow, that's crazy work. So I don't do them anymore, but I'm glad you do. So, and I'm
I have
glad.
a great time doing this. I learn something every single time. So
Great.
thank you. All right. All right. Well, as I said, I hope you'll come back again on another time with us. I'm going to take back the screen and do a little bit of housekeeping before we bring on our last trader. And let's see. And you should be able to see my screen. That was Dr. Barry Burns of Top Dog Trading. And please do go to the chat and take advantage of that link that he gave you. It's called the Rubber Band Trade, and his YouTube channel is fantastic. So we'll go over here. Mr. Troy Noonan is up next. He's with Backpack Trader. He's going to talk to us about how to potentially maximize your profits in minimum time, although he may have changed the name of the presentation. He's going to tell us about that in a minute. He's the CEO and founder of NetPicks Trading LLC and the Backpack Trader. Troy, also known as TJ, has been the director and moderating host of a long-running successful live trade room for NetPicks LLC. It's a trusted provider of investment trading education since '96 up until 2018. He's also a professional trader himself, as well as a trade coach and mentor to countless other traders. In fact, he's trained traders from all walks of life from all around the world. He started with NetPicks since 2006, but in 2018, he left, spinning off his own business, NetPicks Trading LLC, and doing business as the Backpack Trader. Mr. Noonan has more than 28 years of extensive trading experience in Forex, futures, and stocks, and is passionate about his work, which includes teaching others the art and science of trading. He's created some of the most successful trading strategies and training programs on the market today, used by thousands of members worldwide. Strategies such as 7 Summits Trader, Trend Jumper, Counterpunch Trader, Counterpunch Express 1 and 2, Spotlight Power Trader and Master Suite, Catapult Trader, and others. He's also a published author of the Day Trading Quick Start Guide, a #1 best-selling book on Amazon. And he's currently working on his second title, Forex Quick Start Guide, to be released soon. How's that for a bunch of information? And bring in Troy And I'm going to make you presenter. Yes. And also, you should now also be able to see questions. And are you still muted? I'm going to unmute you. There you go. Good afternoon, sir.
I'm muted. Hello. Wow, what an introduction.
Whoa.
I feel old now. And Sherry, thank you so much for inviting me. And I probably should not have changed my title yet, but I am going to talk about the things you promised. Just that
Good deal.
I wanted to make this a little more urgent, I think, and this title, I think, does that.
Identify market breakouts in advance with this insanely accurate trading tool. Uh-oh, we got a tool coming, guys. Come on, bring it.
Yeah, I'll show you. But really, the main point of this presentation is the next smaller part underneath, the 7 best trading hacks known to man, but not known to most traders, and probably not known to most men either. But
that should probably be the title. That's pretty compelling.
Oh, good. I'm glad you like it. So, are we all set? Let's see. Let me just get my questions.
I'm going to mute myself, and I'm going to have you take it away. And when you're ready for me to put up links, just holler at me.
Okay, that's great. Thank you so much, Sherry. I appreciate it. That was a wonderful presentation. Actually, all of them were. I'm really always honored to be a part of a multi-speaker event like this, and particularly honored to close it out today. And I know I've got big shoes to fill, so hopefully I leave you all with something of value. First things first, as you all know, trading is risky. Don't sell the farm. Whatever happened in the past, there's no proof it's going to happen tomorrow. Don't risk money that you cannot afford to kiss goodbye. That's the bottom line, words of wisdom. And I think you all know this already. So let's move on. So let me tell you a little bit about myself. Although I think Sherry did an amazing job. I have been trading a very long time, since the early 90s. She told you all this stuff. So I'm going to kind of skip this because you've seen and heard a lot of this. A lot of you probably know me. I recognize some of the names in attendance. Before I get started, if you guys wouldn't mind, how about typing into the question box where you're all from? Because it's a great big world, but a very small trader community. And I'm always curious to know where people are from. And if you type it in, I'll just go ahead and call it out and let you know. Let me get to the bottom of the question so I could see them. All right, so we got India, Daytona Beach, San Jose, Kansas, Indianapolis, Toronto, Columbus. Wow, South Africa, Spain, Boston, Papua New Guinea, imagine that, Tasmania. All right, we got some people down under and a bunch others. Basically a representation from everyone around the world, and it's amazing. And I would recommend that you get involved with some sort of a trader community. If I have time at the end, I'll tell you about one that I just started a little while ago that you will all be invited to. All right, so let's move on. As you know, I'm known as the backpack trader now. I'll tell you why in a moment. Just quickly, today's agenda, and I have to talk fast. I apologize for that. But this is an hour presentation. I'm trying to cram it in to 45 minutes. So bear with me. I'll skip the stuff that isn't absolutely necessary. We're going to go over the 7 trading hacks, as the title said. Then I'm going to show you how I like to take advantage of key exhaustion levels, and how to identify the balance of power between buyers and sellers. That's a real important piece of information when you're trading. Doesn't matter what you're trading, what style. If you know the balance of power, you're going to be better off than those who don't. And then I'm going to take you into my actual laboratory, which is just a fancy way of saying I'm going to show you some chart examples. How's that? Fair enough? All right, so let me tell you about my first trade, the one that kind of kicked off my career, my wife trade. And of course, no, it's not what you think. I did not trade my wife, but I made a trade that led to my wife. You guys know who George Soros is? George Soros is infamous for breaking the Bank of England. So he made this amazing trade, and I unwittingly took the same trade. I had received a brochure in the mail, saw a pattern called Head and Shoulders, which, I mean, in my mind, I'm like, what does shampoo have to do with trading? And I quickly found out not much. This was a different kind of Head and Shoulders. I unwittingly shorted the pound when it crashed, broke the Bank of England. I took my several grand that I made and traveled through Europe. Being a drummer, I picked up some bongos, started sitting in with musicians all over This is me playing with a Venezuelan friend on the Charles Bridge in Prague a couple years after the Iron Curtain came down. An amazing experience. A year later, I went to visit my friend in Caracas, Venezuela, and within 24 hours, I met the woman who I ended up marrying, and there you can see her in my family. The backpack trader was born. So Soros made billions. I made a wife. I'll let you decide who had the best trade. Here's the point. Trading's just too darn important to get wrong. What it can do for you in your life, I mean, I just showed you what it did for my life. For me, I hear someone saying I'm not a Soros fan. That's fine. You don't have to be. The point is that that truly happened. I mean, it was an amazing trade. And the bigger point is trading can do so much for you. Okay, so it's important that you understand that. Let's get it right. How about this? Who's ready to get it right? If you can state it publicly by typing it into the chat, there's a good chance that you'll take yourself seriously and actually do what you need to do to get it right. So I want you guys to make the commitment, okay? If you're really serious about succeeding at trading, make the commitment, make it to yourself, make it to everyone else in here, and we will all hold each other accountable. How's that sound? All right, so a lot of people typing in, get it right. Yes, I'm serious, I'm ready. Awesome, you guys take this seriously, okay? Trading can change your life if you do it the right way. Let's make that happen. All right, so we're gonna go through these 7 trading hacks, and if you get nothing else from this presentation, take a screenshot, write down these 7 hacks, and make sure you apply each and every one of them to your trading from now going forward forever, okay? Can you do that? So let's go through them right now. Again, I want to go through them quickly because I really want to get to the charts and spend more time showing you examples of trades. I always show examples of the trades that have just happened, same trade plans over and over so you could see its consistency. I'm going to show you something that's been around for about 7 years, works exactly the same today as it has since it first came out. It is dynamic, it dances with the market, and we'll get into that in a moment. So these are the 7 hacks. And number 1, that's one of the most important things you can ever do, and I hope you never, ever risk 1 penny of your hard-earned money again in the markets until you master this first hack. Prove it to yourself. I mean, think about what that can do for you. What if you can go through a series of exercises, like tangible things? We're not talking shovel and smoke here. We're talking doing real stuff. And the result of that is that you see a trade plan, a way of trading. Oh, by the way, I just gave away the second hack, but you see something that you can prove to yourself will make you money if you just execute it. And you go through it over and over again. Is that going to make a difference for you? You think you're going to be in a better position when you finally do risk your money? I would say don't ever take another trade with real money until you can do number 1. That's some sound advice, right? Remember, trading is too important to get it wrong. You have to get it right. Okay, so the next one is the power of the trade plan. We'll get into that. We're also going to get into dance with the market, control and surrender. Okay, that's kind of an interesting one. Hopefully that's provoking your curiosity. It should. Obviously, number 4, lifestyle, trading less, but making more as a result, which results in also trading less and being able to live more the way you want to. Okay, could we all get behind that 4th hack? Believe it or not, that's super important to succeeding at trading. Okay, number 5, the 2% rule. We'll get into what that is. Of course, Einstein, we all know who he is. Let's just suffice it to say now, you're probably wise to not argue with Einstein. Einstein. We're not going to argue with Einstein. Okay, and then finally, number 7, the 5% art to trading, and I'll show you exactly what all this is. Let's get into it. Again, I'm cramming a bunch of information into a shorter window of time, so you'll be able to see this recording when it comes out again, and you can replay it when you're ready and slow it down or whatever. All right, so prove it to yourself. So you've all heard of the movie The Good, the Bad, and the Ugly, right? A famous Clint Eastwood movie. All right, well, I've kind of borrowed it, and then I added and the great. The good, the bad, and the ugly, and the great. And why is this critical? Okay, so what you see here is a pre-programmed spreadsheet. This is something I give to all my members, no matter what strategy or training program that I'm going through with them. This is a pre-programmed spreadsheet where I teach traders how to log their trades and build what's called a win-loss column. And you could see a little sample here, some winners, some losers, some break-evens, etc. And the thing that you learn over time is the random distribution of wins and losses. And if you think about it, we're all taking trades at the right edge of the chart, aren't we? We don't know what's going to happen next. And that's precisely what gives most traders problems, because as human beings, we need to be in control. And when we're not in control, our very survival is now at risk. It's a real primal thing. That's why human beings typically make terrible traders. If you want to be a good trader, you have to become a trader. It's an evolutionary thing that you have to kind of metamorphosize yourself into. Does that make sense? Does everyone understand that? So when you start living with a win-loss column of a trade plan that you're trying to prove to yourself, well, you start experiencing the good, the bad, some ugly, but also the great. And when you learn that despite some ugly, you still witness your equity curve going up and up and up, 2 steps forward, 1 step back, 2 steps forward, 1 step back, you finally get the aha moment. Oh my goodness, this is what it is to make money as a trader. This is what it looks like. This is how it feels. And when you could do that on the sideline with your money safely parked, you can start to get confidence and build a foundation of belief for yourself. If you don't have a foundation of belief, you're not going to succeed. You're just not. Okay, that's just how trading is. So I always like to think of the forest, and you should too. Every tree, every trade is a tree in your forest, but the forest is all your trees. It's your equity curve. And you have to be okay to sacrifice, say, 1/3 of the trees in your forest if you can grow your forest 2/3 larger as a result. And if you can come from that position, your odds of success are going to go way up. Okay, I hope you guys can see the sense in that. I'd love to spend more time talking to you about this prove it to yourself thing, because it is the most critical thing of all, but we have to move on. But let me just show you, this is a forest right here. Okay, this is from the strategy I'm going to show you. By the way, this is from 2015, a trade plan that I still do the exact same way today that I did back then, over 6 years ago. Now, what if you started trading this over here, and you started trading and it started going down, 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 down? Chances are you're going to end up quitting and you're never going to make it to here. But ask yourself this: if you could start over here on the left side of this curve and 10 months later end up here, and that's without even using the other hacks that I'm going to teach you, this is just a single contract, every single trade, would you want to do that? Do you think you can take that journey? If you don't prove it to yourself first, I guarantee you're going to get caught up in some of these little, potholes along the way, and you're going to quit. And then you're going to throw the baby out with the bathwater and miss all this money. All your reason for trading, it's going to pass you by. Does that make sense, guys? That's how important this is. So prove it to yourself first, and there are techniques and how to do it. And I suggest you learn what they are. Let's get into the next one, the power of the trade plan. Plan your trade, trade your plan. So all my strategies, and the one I'm going to show you today, will show you the exact trade in the data window, your entry, your targets, your stops, how much your reward is, what your risk is, what your risk reward ratios are. There will be nothing left unknown. From A to Z, you will know every trade. Okay, so each trade is its own trade plan. This is this here on the right that I blew up. Well, this trade started back here. When this bar showed up on the right edge of the chart, you had an entry, this little plus sign. It's below the bar. That means you go short. If it's above the line, I should say, this line, you go long, okay? And then you get your targets, your stop. Targets, very accurate, as you can see. That's what the title said. Accurate targets, right? Insanely accurate targets, and you'll see, okay? Not only is the trade its own trade plan, but then that is a part of a bigger plan. And the bigger plan is, what time do you start trading? What chart? What symbol? When do you stop trading? What are your goals? What are your targets? What are your rules? And I'll explain how this works in a moment. But the power of the trade plan is what gives you the ability to what? Hack number one, to prove it to yourself first, and then you can lean on the plan and just execute it. You don't have to be that person who's trying to trade anymore. You could actually become a trader and learn how to just execute the plan. Okay, very important hack. You with me so far? Okay, dancing with the market. So what I'm showing you in these examples is a trade plan, a strategy that knows how to tune itself in real time. It is able to assess what the market is, the volatility of the market, and then adjust the trades accordingly so that they have the highest chances for success. And to best illustrate that, you can see this long trade on the left. By the way, this is crude oil. Every tick is worth $10, right? 1 penny. And notice that target 3 is positioned right up here, the third dot above the little plus sign, and that's about as far as the market wanted to go before turning the other direction. And then notice the short trade, how much larger that trade is. The second target, perfectly tuned, that was 17 ticks. This third target was 10 ticks before it went up again. And remember, this is happening on the right edge of the chart. It doesn't know what the price is going to do next. This is what it called at the time, and this is what happened after. If you know you have a trade plan that could look at a pattern that just happened and predict something that's likely to happen with very high odds, are you going to be better off? Are you going to be able to believe in it? Are you going to be able to prove it yourself when you have tools like this? I think you're going to answer yes, you can. So the power of dynamic setups, okay? The ability to dance with the market. The price action is in charge and the strategy adjusts to it, okay? So like this, you could trade just about anything. It doesn't care what the symbol is. It doesn't care what the time frame, the chart. It doesn't matter whether you want to day trade or swing trade or position trade. You can do it. Now, some charts are obviously better than others. You still want to prove it yourself. You don't want to shove a round peg into a square hole. Some things will not work, but that's also valuable information, isn't it? If you can quickly see, oh my goodness, it's not working. Great, move on, find something else it is. Why waste your time? There's plenty of opportunities. Don't waste your time chasing something that isn't going to work. The good news is that a lot works. There's a lot that works. All right, so dancing with the market. Here's another example. Notice how large this is. Notice how perfect the target is before it starts moving up. Okay, and I'm going to show you how this works. I'm going to deconstruct this entire strategy and reconstruct it before your very eyes so you totally understand it. There's no mystery as to how and why this is as good as it is. Okay, remember, we're in our 7th year. This has not changed at all. Lifestyle, power of the lifestyle. So here's the thing. Most traders feel like they need to adjust their lifestyle to accommodate their trading. And that is completely backwards. And if that's you, I want you to really take a close look at what you're doing and rethink things. I know a lot of people that trade Forex, for example, they will go to sleep with their laptop. And by the way, their marriage didn't work out very well. Poor them. I hope that's not you. I used to sleep with my laptop and I learned really quickly that that is just no way to trade. It's a big mistake. What you want to do instead is find the right trading method that will fit the kind of life you want to lead. That's why I started the backpack trader. The backpack trader doesn't mean you got to schlep a backpack all around. No, what it tells you is that you have the freedom to come and go, to do as you please. And whether you want to trade from the Siberian Express or your own sofa or anywhere in between, and I'm sure all of you will do one of those 3 things, that is the spirit of the backpack trader. Okay, so that is so important that you understand the power of lifestyle. If you trade less, you will make more. Now, that might sound counterintuitive, but if you think back on what I just showed you, the win-loss column on that spreadsheet and the random distribution of wins and losses, even a system that wins 90% of the time, it might compel you to take another trade, but let's face it, you can lose 10 in a row and it's still a strategy that wins 90% of the time. Would you have not been better off just taking your money, put it in your pocket, and then come back tomorrow and do the same thing again? We call that the power of quitting. You use a plan that can dance with the market and you take what the market wants to give you, following a plan that wins a vast majority of the time. And like this, you control your drawdown with minimal and efficient trading. And then when you want to give yourself a raise, you just move your finger over from the 1 to the 2. And that's one of the other hacks. You don't have to trade more to make more. Okay, we're going to get to that in a moment, but it starts with the 2% rule. Now, a lot of times I'll explain trading as this three-legged stool, and the first leg is your trade system. One I'm going to show you today, but regardless of what it is, there's countless systems. The second one, of course, is money management, how you manage your money when you're trading. The third one, of course, is trader psychology. You need all three or the stool topples over. And you need a strong foundation to set it on as well, which is what I'm trying to create for you with this presentation. But the 2% rule has to do with the money management leg. And what it says is that you risk 2% of your capital on a proven trade, a trade that's part of a proven trade plan. Like all these hacks fit together. And that 2% grows as your position grows. So you're not trading more to make more. As you grow your account, you get to that point where you can move your finger from the 1 to the 2, or the 2 to the 3, or the 19 to the 20. You see what I'm saying? Sometimes you go back. Sometimes you have to take some off. Have a little drawdown from time to time. You saw that equity curve. The forest will give up some trees so that it can grow larger. Okay, so you use the 2% rule to guide your position sizing on a trade plan that you've proven to yourself will make money. You see how this all fits together? Okay, so Einstein basically teaches us that the eighth wonder of the world, which is the power of compounding. So you use that 2% rule and you compound. So for example, let's say this is actually an actual trade plan. This was back in 2019. I think this was a Forex plan. And from here to here, like for several months, it's really hard to notice that you're getting any traction, because if you're trading small, and this is actually a very small account that started with a $2,000 account, and it's all hypothetical, by the way. I'm using this to illustrate to you the point, okay? The ramping up is exponential. And when you hit a certain point, the curve gets steeper and steeper, faster and faster. And it would have kept going up to infinity, but we capped it out at 1,000 lots just to illustrate. So 2%, 2%, 2% of every trade of you know, as your equity grows or shrinks, you see how the positions come on and off, but eventually you hit a point where it just wins, and you can't go higher than 1,000 lots because that's what we capped it at. So if this is 2% of your capital here, finally trading 1,000 lots, what percent of your capital is 1,000 lots over here? 1/10 of 1%, maybe less. Is anyone going to have a problem taking a 1,000 lot trade if it only represents 1/10 of 1% of your capital? This is the power of compounding. This is what trading can do for you if you do it right. And I'm using these extreme examples to illustrate the point. Okay, don't get caught up in the numbers. Think about what I'm saying and why this is so important. You don't have to trade more to make more. You trade less to make more. You understand what I'm saying? This is a truth in trading. All right, if you want to trade more, you can trade less also. You just duplicate and make more trade plans. All right, so you can have your cake and eat it too. You can trade more and still trade less. Funny how that works. This is just illustrating the same thing. If you took that $2,000 and you never added 2% position sizing and you just kept the small position all the way through the exact same trades, you still would have grown your account considerably, over 400%. That's absurd unto itself. But look at the ramping up when you add that 2% power of compounding, Einstein's eighth wonder of the world, some steeper drawdown, but look at how it zooms up and up. $2,000, if you do the math, became over $330,000. It just seems mind-boggling. But I'm again showing you the difference between the left side without compounding and the right side, the exact same trades, compounding. Ask yourself if you are doing this with your trading, and if you're not doing it, let's change that. Okay, you just said you're serious about being successful as a trader. You understand what it can do for you in your life. This is part of the deal. This is what will help you get there. All right, and then finally, the 5% art to trading. I call it buying insurance when you're placing a trade. I can't get into it too deeply because I'm gonna run out of time. I wanna get to these examples. Ultimately, let me just give you one quick example. If you have major resistance on a long trade, don't put your entry a few ticks below the resistance. Adjust it above. prove that the price can break through. That's part of the 5% art to trading. The problem is that most traders tend to interject more of themselves than they should. The 5% art becomes 20% or 50% or 90%, right? And they get away from the trade plan, they get away from their method, and now what? It's a slippery slope. Because in the end, you want something that you can get measurable results for. You want to be able to do your testing so that you can prove it yourself and get results that you can measure. And if you put in too much art and get away from your rules, you'll never be able to duplicate the thing that showed success. You have to have something that's duplicatable, right? So you don't want to be much of an artist. You want to be as mechanical as you can be. That's how you prove it yourself. See how it all fits together? If you have any questions, let me know, but hopefully you guys are understanding what I'm saying, okay? So this will all come together in a moment. I'm gonna give you guys a quiz in a moment, so I want you to pay attention. I'm gonna show you how we take advantage of exhaustion levels, but you know what I think I'm gonna do? I'm gonna skip this next section and show it to you in the demo because I'm gonna run out of time. All right, so I'll explain what all this is in a moment. I'm gonna have to skip the quiz this time, unfortunately, because I'm gonna run out of time. So let's just get right to the demo. I'll just explain to you that I'll explain that in a moment too. Let's just get to the demo. Okay. Sorry guys, but an hour-long presentation doesn't quite fit into 45 minutes. So let's just look at this chart. All right, I took examples from yesterday, and I'll show you some from today too, but because I was preparing for yesterday, because I had a lot to do this morning. So this is yesterday's session. You would have seen this in our trade room, for example. This is the Dow E-mini, and we've been trading this exact plan for a long time. Now, this starts at 8:30 Central Time, right, when the market's open. Now, I want you to guess which direction the market is going to go, up or down. And type it in. I'll tell you, the right answer right now is I don't know, because we can guess all we want and it's as good as anyone else's guess, because it can do yes, it can go up, it can go down, and go sideways. No one really knows. And if you guess it right, does that make you smarter than anyone else or luckier than anyone else, right? So the idea here is that we need more information. So first we identify, here's how this strategy works. The first thing we're going to do is identify when the buyers and sellers become exhausted. And that piece of information is going to give us more than most traders have. And the way we do this is like this. We put on these dots. They're just dots, all right? This is going to be your quiz. But the ones that are above the price is telling you when the buyers are tired, and the ones that are below the price are telling you when the sellers are tired. And there's different levels of exhaustion. Sometimes one side is just catching its breath before it resumes its strength, okay? But the idea is that when you see these exhaustion dots, chances are the markets could go up, okay? So it's still not enough information, but this is still very valuable. I got this from Muhammad Ali's rope-a-dope concept, where he lets his opponent get tired and then he comes out swinging, right? That's why this strategy, in case you haven't guessed yet, is called the counterpunch. This is a counterpunch express 2. It's a new strategy. I've streamlined it for simplicity, which you will see. So the next thing we're going to do is we're going to identify the balance of power. And that's what this line is. This is the balance line. Everything below the line tells you that the sellers are in charge. Above the line tells you the buyers are in charge. So let me ask you this. If you know that the buyers are tired and then the bars are starting to close below our balance line, this is also known as the crocodile pit line, because it's a tug of war. And on one side of the crocodile pit are sellers, on the other side are buyers. You don't want to get drug into the crocodile pit. You want to be trading with the strength. So the buyers are tired. It's closing below the crocodile pit line. The sellers are in charge. If you have this and nothing else, I tell you, I've known this for many years. If you know how to use these tools, you are 90% off, better off than people who don't have information like this. It's very visual, and this makes it easy to prove your assumptions. But we're going to still stack the odds in our favor. The trick to a successful trading strategy is putting together smart pieces of confirmation, price action confirmation. You want your strategy to be based on price action so you can dance with the market. The price action's in charge, right? We don't need to fight that. We don't fight City Hall. We go with it. Got it? All right, so we're gonna add something. This is the high trend chop indicator. It's an indicator I can give you guys for free. You can use it just by itself. But the whole point is that you can see what's happening on the fast trend on a chart 5 times higher than this. So this is a 14-point momentum bar, multiply 14 by 5. That time chart, a slower chart, this is what the fast trend is doing on the slower chart. Now, if you know anything about trend analysis, there's the fast trend, the intermediate trend, and the slow trend. This is more of an intermediate trend on our faster chart that we're going to trade, but when you can conceptualize this on 5 time higher, time frame higher, this is the fast trend, right? So we don't have to look at another chart. We have all the information right on the chart we're trading. There's another part of it called the chop filter, which will identify areas where it's choppy, and then that will help filter out some trades for us. But that is a minor thing. It's still pretty useful. Okay, I don't know if I'll get into that. Not sure I have time, but it's part of this. Okay, so let's take a look at today's session. So today's session, now we get to see who was right. Did it go up or did it go down? Well, it went up. And then 2 bars later, 1 second after the market opened, there's a long trade. And you know it's a long trade because that little plus sign's above our line. Okay, and here's the entry. And here are our targets. The objective of the strategy is to either go to one of these targets, normally target 2. In this particular chart, we can actually go to target 1 because it's a larger chart, but normally it's going to be target 2. When we get to target 1 though, we will move our stop, which happens to be down here at these dots, and we'll move it up to lock in 1 tick of profit, and then it will begin to trail the balance line. All right, so the first objective is to get to a risk-free position. And the second objective, obviously, is to hit our goals, whether it's target 1 or target 2, maybe it's target 2 and 3, or maybe it's target 2 and we trail. If you're trading multiple positions, you have a lot of flexibility, but when you hit the goal, you are done. Power of quitting. Quit for the day, come back tomorrow and do it again, okay? And then we'll use Einstein's power of compounding. So here's the trade. This is what happens. This was yesterday's session. So it comes up and it almost gets to target 1, not quite, and it hits target 1 right here. And you can see that the stop moved from here more than break even because it's trailing also the balance line. It moved all the way up to here. So that target was good for 52 points. All right, that's $260 a contract. So this strategy hit its goals, okay? But if you're going to target 2, you might have to take 1 more trade. And so if you did, if that was your goal for the trade plan, look what happened on the next trade. Notice it's a smaller trade, but we also protect ourselves with the ability to trail. And the markets just were crazy. This was yesterday. It was an amazing session. Anyone know how much that made? Well, I marked it up for you. I'm going to get through these examples quickly now because I want to show you a lot in a very short amount of time. This is what it made yesterday. It was a 183-point trailer, $915 a contract. Okay, this was a good day. So what about today? Let's just look at today really quick and then I'll move on. So today at 8:30, well, I kind of stole my own thunder here. There were 2 things that happened. If you're only going to target 1, it got there, you would have been done for the day. And that literally took 6 minutes. How's a 6-minute workday sound? Then it stopped out at break even. But if you're going to target 2, which is a viable option, then you would have had the second trade and it hit all its targets and it trailed down to here. So this was today. This is the same trade plan we've been looking at and doing in the trade room forever. I always like to show the newest stuff when I'm showing this strategy. All right, so the Dow E-mini, another winner. It's one of my favorite markets to trade. If I had to choose between all the E-minis, it would be this because it is so consistent. That's the name of the game. Let's take a look at crude oil. Today's crude oil session wasn't the greatest, but it was not bad either. The first trade actually lost, and the counterpunch had you flipping over. So the stop was up here, but it got you long here, and you saved a little bit. So that's good. When you lose less than you should, it got you into a perfect target 1. again, with the 8-tick momentum bar, you can take profit at target 1. You would have been about break even, so you need to trade again because we want to quit with a positive result. So the third trade had no problems getting to its targets. And if that wasn't enough, and I wanted to show you this because of its tuning, dancing with the market, look how perfect these targets are. Target 1, couldn't go any more than that. Target 3, missed by 1 tick. Look at this target 2. It went 1 tick beyond. All different sizes. It's tuning itself and dancing with the market. And even though I created this years ago, and I've shown this thousands of times probably, it still never ceases to amaze me how accurate this thing is. Let me quickly get through a few things here because I want to show you, I have a special deal for you in case you want to get this. I've got a special webinar offer for you, but let me show you if you're a Forex trader. I did forget to ask what you like to trade, whether it's Forex, equities, options, futures. This is good for all of it. I want to also introduce a bonus indicator that I throw in for the webinar special. This is our trend mode indicator. This filters out a lot of trades. You only go long when the line is blue. You only go short when the line is red. So you can trade the Counterpunch Express in a few different modes, and I go through this thoroughly in training, and you prove it to yourself. Some modes work better than others on different charts. So this is a US Swiss franc. It's a day trade, a day chart. It's a swing trade. Every bar is 1 day, and you can see hundreds of pips of profit. Here's a short trade that would have been a loser, but because it's trend mode, you don't go short. Instead, you get long. Perfect target. Look how perfect that is. Again, it doesn't care what the market is. It got short right here because it was red for 1 bar. You look to the left, the one to the right hadn't happened yet. Get short on the next day because it's based on when the bar is closed. So when this bar closed, you're already in the trade, and then it turned blue, you see? So you're already in the trade. Then it turned red again anyway. But look at how perfect target 1 was. Target 2 barely missed it here, then went through, and now look at target 3, and that's where it's stalling, and then it stops out with its trailer. I mean, there's hundreds of pips, 2, 3, 4, almost 500 pips here. You just scale your position size down so you're only risking 2%. It's the beauty of Forex. You can tune your position size by risking 2% with a smart combination of micros, minis, full-size lots. And as you grow your account, you saw in that histogram how powerful the power of compounding can be. And Forex is a great way to do it, especially if you have a small account. And what if you're a real busy person and you don't have time to day trade? I mean, I showed you in the YM and crude oil day trades that you would have committed probably less than 30 minutes. I mean, maybe only a few minutes. I took a trade today that was 3 minutes and I was finished, heating oil futures. It's one of my favorite markets to trade. But anyway, the point is that what if you don't have time to trade in the day because you work? You can swing trade. When you get home from work, you can spend 10, 20 minutes, 15 minutes a day on average. You can look at a dozen or more different charts, Forex charts, for example, and it'll take you just a few minutes to place trades, cancel trades, and move stops. And that's it. And you could let the long-term power of a trending market that you often see in Forex work for you with very minimal time. Okay, so this is a nice way to trade. I really like trading like this. I'd love to show you this 4-hour chart. It only uses the 4 p.m. and 8 p.m. bar. Doesn't care about any other bar, just those 2 bars. It's been winning 85% of its trades for the last 15 years. I put this plan out about 6 or 7 years ago. It was winning 85, 86% of its trades. Speed forward 6, 7 years later, it's still winning the same. How's that for consistency? So I've shown you Forex. You could day trade it also, but I want to show you what you can do. Probably the best way, one of the best ways to trade this is with options, because you can put on a daily chart. Here's the spider, right? The S&P ETF. Look, 31 million shares. Look at all those shares trading in real time right now. It's just amazing. And you could take the setup. It says long at 313.8, right? Well, do you want to buy 100 shares and commit $31,000? And if it goes up $2, you make $200. Do you want to do that with $31,000 on the line? Or do you want to just buy simple in the money call options and pennies on the dollar make double and triple digit percentage gains? And as you grow your account with 2% rule, you just add more options, right? first of all, you're never going to lose more than the cost of the option, but you're not even going to lose that, because even if the trade loses, you'll sell the option back and recover some of your premium. This is an amazing way to trade. And when it wins as often as this, you're going to see why. But notice that each one of these targets, this made a 37% return on one trade, just to target one, or 65. Look, 112, 121% return on this trade. Okay, this is dating back to June of 2020. We were like a couple months into COVID. All right, so let me just walk you through a couple things. All right, so first of all, this trade loses, but the stop's way up here, but the system identified a change. It's dancing with the market. So you're selling your option back and you're only losing the small piece of price action, right? You're getting a lot back for your option, a little bit of a loss, and then it comes up and hits a perfect target one, and you're feeling pretty happy. Okay, look at the short. Look how perfect that target was. I didn't mark up the percentage gains. You saw in that first trade, and you can just imagine that these are large percentage gains. Another great target. And just notice, here's another small losing trade, but then look what happens. I just want you to see the perfection of the targets with every trade so that you can adjust your position size accordingly. And I'm just going to walk you through rather quickly here. This takes us up to the end. Okay, so this is a trade we're in. Will it win? Will it lose? I mean, the markets are kind of selling off right now, but the stop's down here. It may survive. We don't know. But this is a wonderful way to trade. And I'm going to quickly show you one more, and then we'll get into how you can get this. We're almost done here. The Qs, all right, the story of COVID. This is when the markets crashed last year. There's a trade in here too. I'm only showing you the green trades. There's three trades: the green trade, purple trade, and white trade. I'm only showing you the green trade because that's maybe all you need, but you could put on the others. The white trade called this short like a day before the crash. It's like, it's uncanny how it does that. But the green trade gave this perfect target here, and then just follow me all the way up. It's using trend mode, so it's going to avoid some trades, but just notice, look at the perfection of these targets. Different sizes, tuning itself, dancing with the markets. I mean, how perfect is that? By the way, that's $16.04 on the Qs, so you can imagine how much that made on a simple call option. Look at this one. It just missed. It missed by a ham sandwich. It would have lost money here, but guess what? It's a blue line. We don't go short, we stay long. So here, trend mode filters out what would have been a losing trade, and instead puts us in a long trade and another near perfect target. This one overshot a little, and now here we are. And I'd say, I think we're near the end, but we're not. This is only September of 2020. A lot of trades in here. Notice that there's nothing in here. That's okay. The next trade, I mean, you can see what they're making. Okay, I think you get the idea, right? Another perfect target. I think I've shown you a lot. Look at that one. I mean, how does it know that? How does it know to put that target $10 up and this one $13.38? Anyway, whatever. Okay, there's a losing trade. You kind of get the point, right? So let me return to the slides. I want to save time for some questions. I know I'm getting to the end here. I did start a little late, so hopefully Sherry lets me go a few minutes longer. But let me jump over to the slides. This is an amazing deal that I've got for you. Of course, I've got lots. We do the crude oil inventory report every week. You can trade that with me, and you can see recordings of this session for years on my YouTube channel, which I will I'll put the YouTube channel in the chat in a moment if you guys want to see my YouTube videos. I got hundreds of testimonials. I started saving them back in 2011. Here's a few of them, the CPX, how great it is. I'm sorry I don't have time. I have to rush through this stuff, but I'll let you look at this on your own when you see the recording. But I mean, this is back in 2016. I've got new ones that keep coming in. So the whole idea is that you can prove to yourself first before you risk your money. The truth is, we don't know bleep about what's going to happen, right? We bleeped out the word shit. We don't know shit. We're all adults here. We don't know bleep. That's what trading is. You have to learn how to deal with that. Hopefully I showed you ways to do that. Okay, we're going to dance with the market. Eighth wonder, I got to go fast. This is how it works. All right, first of all, if you do decide to go with me in my training and get this system, you get everything. Okay, A through Z, nuts to bolts, and you own it for life, and there's no hidden costs. I'm going to give you one price. You're going to see what it is, and you're going to be like, oh no, I thought it was 3 times that. Should be 10 times what I'm going to show you. Newly upgraded. I used to sell the Counterpunch Express. This is a Counterpunch Express 2. It has the trade tracking where you literally see the stops trailing. It knows when to cancel trades. It's amazing. And you can even have supplemental add-on trades you can turn on and off. You have a lot of control, but it's really simple. And you see all the trades in the data window. Okay, this is enhanced because now you get to see the risk reward, details, everything. So you can make really smart decisions when you're trading, including position sizing. It's got the high trend chop filter, right? I showed you that. And trade plans, done for you trade plans. Everyone I showed you, you're going to have those plans and more. You could also learn how to make your own plans using the techniques that I teach, because a lot of you are going to want to chase down your own ideas, and I highly encourage you to do that. You're going to get more though. I'm going to give you a multi-platform license. So whether you're using TradeStation, NinjaTrader 7 or 8, MT4, or Thinkorswim, it works on all of them, and you don't have to choose one or the other. You're going to get a license for all of it. You can put it on 1 or 2 or all of them. It's up to you. Will not cost extra. Of course, I said it's some of the best training I've ever done, and I've done a lot of training. This is some of my best. You get it all. Video-based training, and you have lifetime access. And I'm going to give you that trend mode indicator. It's $197 value, an additional value. Only go long when it's blue, only go short when it's red. When you're trading in trend mode, you'll learn about that. You're going to get that indicator at no extra charge. I told you about the done for you trade plans. All right, so I just stole my own thunder. This is what I should sell it for right now, $997, and that would be fair. That would be worth what? I showed you on the YM yesterday, one trade paid for the whole thing. What I've been showing you, literally one trade is paid for the whole thing or more. Literally one trade, you will own it for life, and I'm not selling it to you for this. The webinar special, including everything I've been talking about, is only $497. Sherry, if you could please put in the link for me. It's really easy, you guys. www.backpacktrader.com/join. Okay, so you can just click on it in the chat box, and
Yeah.
And you know what, Sherry, I did forget. I wanted to give you my YouTube channel. I'm just going to put that in there, okay? So anyone that wants to visit my YouTube channel, I'm going to give the link.
Definitely a great idea.
Yeah, so the Backpack Trader is my YouTube channel.
Perfect.
And so this is basically it. I do have a few bonuses. Do I have a couple more minutes that I could share the bonuses?
Absolutely. It's only 4:07 where I am, so 3:07 CT. So, I mean, everybody's here and really been asking a lot of questions, and they are really interested. So I'd say go on with it.
Okay, thank you so much. And I'll try to get to all your questions too. So first of all, you get to learn how to trade the strategy in real time. And I'm going to shorten your learning curve a lot. I'm giving you free access to my trade room. Now, when I first came out with this, I was giving you free access to my crude oil inventory report. Just that alone each week is worth multiples of this price because it wins so often. And you'll see on the YouTube channel, I've recorded so many of these over the years. I trade it every day live, every week. And that was the bonus. But now I've extended it where I'm just letting you into the trade room. Like there's no limit. Okay, so that comes with. So you could practice the strategy, ask us questions, and learn it in real time. You could prove it to yourself first. You can go through the hacks and get it right. Okay, that is priceless. They teach you how to practice your 25. Anyway, the trade room, 9:30 Eastern time to roughly 10:30, sometimes a little longer, Monday through Thursday. And you'll find the information on our YouTube channel because we just moved it to YouTube Live. And we're loving it. YouTube Live's been great. All right, so you get more. This is the crude oil report, by the way, and this is back in 2016. This is a one and done, tuned perfectly, trailed it further down. Guess what? We're still doing this exact same strategy. Haven't changed a thing. 7 years later, still doing it. That's amazing. All right. This is how it looks on NinjaTrader. This is another crude oil report. You can see a little plus sign. You can see the targets. Someone liked a gray background. Works great on Ninja. Here's the data window. I don't have an example in Thinkorswim or MT4 to show you, but it works the same. Okay, Thinkorswim's a little different. We read the numbers off the margin, but still it works great. The setups are great. Some more trade room. This is just comments from the trade room. Going to get right to it though. I'm going to give you that spreadsheet that I showed you. Okay, the Ultimate Trade Analyzer, the one I showed you in the first hack. I'm going to give that to you as well. That's a $497 bonus. That in itself is worth what I'm charging for everything. But this is one of the most important tools you can use to become a successful trader, because it's how you actually prove it to yourself. Remember that first hack. It's critical to your success. You're going to get this. I want you to succeed. I mean, I'm going to give you everything I possibly can. If you can succeed with my strategy, well, you can imagine what that makes me feel like. But I would love to make you a success story. This strategy can do it. You got all my training, everything. Okay, so this is super important, this bonus. That's how this curve came about. This is the same plan, although instead of a 377 tick, I showed you the 14-point momentum bar, but the 377 tick works great on the YM as well. And you get it all, 497 bucks. Not only that, but I'm going to give you a few more bonuses. You can have a multi-computer license, no extra charge. In other words, you can put it on your laptop, your home computer, your work computer. I'm not going to restrict you from success. Okay, and then finally, these two very important ebooks, the 12 Powers to Successful Trading. The 7 hacks came from these 12 powers, by the way, and then the all-important no-brainer guide to trading success. This is literally a step-by-step guide, if you follow it, on how to become successful with whatever strategy you're using. These two ebooks should become your trading religion. And if you combine this with the power of the Counterpunch Express 2, you've got a winning formula that's going to serve you well for the rest of your life. You learn it once, you use it for a lifetime. All of this would value to 3,500 bucks. I'm going to give it to you for slightly under 500. If you add the value of all this, it's probably more. That's like a 90% discount of what it's really worth, what I could sell it easily on the open market. I'm not doing that. 497 bucks. That's it. One time and you own it. Literally one trade. It's like a cup of coffee a day until you pay off your credit card. I mean, whoop-de-doo. This is just too easy. Only the first 50 subscribers. I mean, I'm gonna have to raise this price. I can't keep it this low forever. I would take advantage of this. Grab this. You got the link. I'm gonna give you my email in case you have any questions. Troy@backpacktrader.com, and there it is in the chat. Okay, so write that down. Email me. I answer all emails. If you have any questions, there are a few questions I want to get to. Are all these webinars recorded? The answer is yes. It is very rare that an indicator works with Forex pairs, but I have an open mind. Yeah, so you're right. Well, Forex, look, first of all, buyers and sellers. This is for Ari. Ari, buyers and sellers, right? Does it matter who it is? Does it matter if it's crude oil or the pound US or soybean futures or Bitcoin, or right? There's supply and demand. So it's rare if an indicator works on anything, not just Forex. All right, so keep that in mind. I think I showed you some examples on how and why this works. Okay, does this work with Thinkorswim and NinjaTrader? The answer is yes. Would you allow us to make 3 payments and you can release the indicator? I'm sorry, Ari. I've just priced this just so low that I just don't have any payment plans on this. I do have payment plans on other things that are more expensive than this, but unfortunately, I can't lower this or do a payment plan on this. Maybe if I had something set up, I would, but at this point, no. You just have to slap it on a credit card and pay the credit card off. Do you have it for TradingView? No, I don't have it for TradingView, and quite frankly, this is too custom. TradingView is not capable of giving you those exhaustion details and the balance line and the things that we need to make those accurate trades. So here's what I would say to you. Don't let tools stop you from the success that you deserve from trading. Trading's too important to let tools get in the way. Just get better tools, right? If you're going to build a hammer, don't use a rock, or if you're going to build a house, don't use a rock to pound nails, right? Get a hydraulic nail gun. My best advice. Do you say YM Dow is your favorite? Darren, that's one of my favorite E-minis. I think that it's the easiest one to succeed with. The Russell used to be my favorite. I've lost my feel for it ever since they went to $50 a point. I'm going to work on it and recreate something new. I traded it for years. S&P, the ES, I think is too difficult at 1250 a tick. Trading against Goldman Sachs and slippage will eat you alive. And the NQ is like Dr. Jekyll and Mr. Hyde, exponentially worse. So the YM is just the easiest one to succeed at with the E-minis. Just my opinion. Some people may think something else. Counterpunch works on all of them. So, you know, you'll learn it. My favorites are the oils: bean oil, heating oil, crude oil, unleaded gas. Some of the under the radar markets are some of my favorites, which I haven't really, again, I wish I had more time, you guys, but please contact me. I'm happy to talk to you about your trading. I'm happy to answer all questions. Go to my YouTube channel. I hope you subscribe. You can join me in the trade room and join me with Counterpunch Express too, while it's still this price. I want to thank Sherry for inviting me. I had such a great time. I hope you got something out of this.
Here.
Yeah, thank you. I hope this was worth it for everybody, and I hope to talk to you again.
Take advantage now. Take advantage. Troy just gave you his email. He gave you his YouTube channel, and he's making a fantastic offer on a huge package. So definitely keep an eye on your email. Definitely get in touch with him. And we want to thank everybody for being here. Thank you, Troy, for joining us. I appreciate it very, very much. And I can't wait to see what you got next time. And I would like to, I'm going to take back over here. I got to show off my last screen. And I hope you have a good afternoon, Troy.
I just muted myself. Thank you so much, Sherry, again. I really appreciated it. And I hope everyone's successful going forward. Remember, prove it to yourself first. Bye, everybody.
Awesome. Thank you. Guys, this has been a presentation of Traders Exclusive. Visit the website, tradersexclusive.com. We've also got a Twitter. It's options_info. Again, we're going to get a replay. You're going to get an email from GoToWebinar. You're going to get an email from all of our speakers. You can choose to subscribe to them or unsubscribe to them as you choose. And we just really appreciate you being here with us. We hope you'll join us again. And this is your host, Sherry, saying trade well. Have a good day.